you feel internal pressure, or again, not so much? Doesn't actually impact. Does the central bank have to try harder to make sure that everybody understands that you're independent, or again, does it not factor?
No, I don't. I think, you know, it's the same as, again, throughout my career. It's like we're not partisan, we're not political. I'm not even, was not even nominated by a political figure through the Federal Reserve Bank president process. So you really feel like this is how we've always operated, again, through many different administrations through my career, and that has served us very well. And that's what I think the American people, quite honestly, expect from us. Like, we're pretty technocratic, and to be honest, very nerdy, very focused on the data, the analysis, and doing our best for the American people, regardless of outside commentary or politics.
Do you think U.S. citizens understand what the central bank does? Does there need to be more outreach, to make sure that they grasp these subjects?
Well, I think, one of the things, I'll just be real about it, actually, is, people have lives. They've got family, and they've got maybe people they're taking care of. They've got jobs. They've got a lot of responsibilities. I wouldn't expect people to spend a lot of time thinking about the FOMC meeting and the statements and the minutes from the meeting. I would hope that if we do our job really well, we're taking the concerns about inflation of the future, concerns about is the Fed going to be there to do their job, off the table, so that people, whether you're families or businesses, can focus on the things that's really important for them to get right in their lives, and that our job is to make them not have to worry as much about economic and price instabilities. And so I feel like, in a way, a sign of success is that people are not, kind of so focused in their everyday lives about what we're doing. But we just have to, that commitment just has to show through in our actions and hopefully the outcomes that we're able to achieve.
President John Williams, thank you so much for joining us. So that's it from Reykjavik here in Iceland, where we had a central bank forum. With that, I'm going to hand it back to you, New York.
All right, Francine, thanks very much. New York Fed President John Williams and Bloomberg's Francine Lacqua coming out of Reykjavik, Iceland. What a fascinating career. He mentioned in that interview that he's been with the Fed for over 30 years, so I looked at his CV. Kicking off in 1994, obviously he became eventually the president of the Federal Reserve Bank of San Francisco, and now he's the president of the Federal Reserve Bank of New York. So he's done both coasts, and in the meantime, or in the middle of that, he was a senior economic advisor to President Clinton at the end of his second term.
Yeah, and now here in New York, of course, very closely tied to the market functionings. And fun little fact, market plumbing thing going on here. Actually, the Federal Reserve right now keeping a close eye on those repo market operations. So clearly still concerns about those treasury markets, which, by the way, are actually up on the week in terms of yield. So with all the perceived calm, Matt, you're actually ending the week higher on yields and flat to lower on equity markets.
Right, looking at 436, 437 right now on the 10-year, so not quite back to the danger zone that we had seen before. Here you see S&P futures up 1/3% after closing in the green yesterday and the day before. So 3 days in a row of gains after a slow start to the week. Less than 4 minutes to go until the opening bell. Maria Waitman joins us next. This is Bloomberg.
In this facility, which is part of your $2 billion investment in the last 2 years, it's a massive amount.
Yes, because, we focused a lot on automation and upgrading our quality standards. so that we can adhere to the US FDA and European standards, because some of our vaccines now are going even to the West, which is a fundamental shift in our strategy, you know, from back in the day when my father started the business, where we were predominantly in India and the developing
India-centric, now you're more global.
Yes.
So you're about 8,000 strong in this facility? All Indian nationals?
Mostly Indian, yes. I would say 99% of talent that we've trained overseas and in India. We have our own internal skill building center where we train on site.
Serum started with just producing vaccine for tetanus, but is producing a lot more vaccines now. What is the next big thing you think?
A global pandemic flu vaccine is something that we're working on, and I think the world will need that. Not only for the annual flu cases, but God forbid there's a flu pandemic. I think we are very well poised to make 1.5, 2 billion doses and roll it out very quickly to protect the world. And we have, of course, the other vaccines, as we talked about, HPV and malaria, that we've just launched, and we're going to scale that up as well.
US tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
We are moments away from the start of trading. This is Bloomberg Open Interest. I'm Matt Miller. Futures higher ahead of the U.S.-China talks in Switzerland, although we're only looking at gains of a little more than 0.25% now on S&P futures. NASDAQ futures up 0.4%. If we do close out the session in the green, it'll be the third consecutive day of gains after Monday and Tuesday. We're down. You hear the New York Stock Exchange bell. Mark Bristow there, we just had him on the program. The CEO of Barrick Mining Corp ringing the bell. They have a single letter ticker, which is really a pretty cool deal. B is the ticker there. STRZ ringing the bell at the NASDAQ after a split with Lionsgate. So STARS will trade on the NASDAQ now, and Lionsgate will be LION on the New York Stock Exchange. In terms of the movers ahead of, or I should say, seconds into the session, we're going to look at kind of a mixed picture here. You got Lyft up, but Expedia down.
Yeah, seriously, a mixed picture here. It's still earnings season, as we've been talking about, Matt. Still earnings season. Consumer-facing stocks, Lyft boosting its outlook, now up about 16%. That has been accelerating its gains throughout the morning. Expedia now down almost 12%, accelerating losses throughout the morning. Affirm Holdings now down about 7%. The forecast was disappointing. Of course, that is a barometer of some credit health there, Matt. We will keep an eye, of course. Our team at Bloomberg Technology has an interview with the CEO in the 11 o'clock hour.
All right, we'll be watching that closely. Also, IAG is going to buy, 32 Boeing jets for British Airways, its biggest order to date following yesterday's trade agreement between the U.S. and the U.K. You can see Boeing is only up 1.5%. I was just looking, by the way, at Wolfspeed. You know, this is a chip maker that our producer in London, Dan Curtis, is always paying very close attention to. Right now, Wolfspeed shares are down 23% at the open. So obviously, these AI-related companies are pretty volatile, but a 23% drop for Wolfspeed as a going concern risk spurs many cuts on Wall Street. Maybe that's one we'll talk about throughout the program. Now, Bank of America says the party is over for U.S. equity. Strategist Michael Hartnett says investors were right to rally on optimism on trade deals, but that won't last. Hartnett argues investors will buy the expectation, sell the fact when trade deals are announced. When I was a kid, we used to say, buy the rumor, sell the news. Let's bring in Maria Waitman, head of equity research at State Street Global Markets. So Maria, first of all, good morning. Great to see you on this Friday. What do you think? I mean, it seems like we fell a little bit too far after Liberation Day. Now we've rallied a little bit too much in expectation on trade deals.
Well, I think I'll be a little bit more optimistic than some of my peers. So for what we see in our indicators, and primarily State Street custodial database, so what investors have done since the start of the year, when we were all super optimistic about U.S. stocks and U.S. exceptionals, they really squared up their positions. So allocations to, say, tech is gone from the highest ever to neutral. Allocation to cyclical defensive trade gone to neutral. Allocation to U.S. dollar gone to neutral. EMFX at benchmark. Risk appetite is all at benchmark. So investors really squared up those positions. So now we're at a level where, okay, market expects kind of a lot of bad news. There are lots of pessimism. All the expectations, all the surveys are very, very negative. So to me, that's kind of that's the rumor that everything is super bad. So to me, the kind of risk reward is a little bit on the upside, given that if we get something, that's positive, and then investors can start kind of potentially like rebuilding positions in some areas.
Yeah, the optimism was certainly felt this week, but it's interesting. If you look at the S&P 500, we're on track to really end the week flat. I want to pull up what S&P 500 looked like because it tells you a little bit where investor sentiment is going, and you really saw a lot of that pain on the week in the healthcare sector. Now, this is the sector where there's still a lot of uncertainty around Trump's tariffs, but other places like consumer discretionary, even energy, financials, were all up on the week. Maria, does this mean that the healthcare sector might be sold off enough, given that we're kind of still at peak uncertainty for the moment? Does it bode well for everything else?
Yeah, I mean, to me, healthcare is like a tricky one. The healthcare sector is a sector where we see the lowest institutional investor holding. So that's the sector with biggest underweight position. And I fully get there is huge uncertainty. There is regulatory uncertainty in US. There is tariff uncertainty. So lots and lots of risk for the sector. But given how low the positioning is and uncertainty, I mean, we should kind of think about uncertainty as kind of two-way risk. So it can happen or not happen. So kind of probabilistically. And positioning is really, really low. And I mean, healthcare companies, they do have like strong return on equities. They have good cash flow generation. Their margins have come down quite a lot. Now they look like stabilized. So to me, that's actually quite decent quality defensive sector. So to me, healthcare looks somewhat interesting. So yeah, no, I wouldn't be that downbeat on healthcare.
When you look, you say all roads still lead to the U.S., and we've seen, you know, so many people move to diversify internationally, Maria. Clearly, you come from overseas, so you know, have a different universe around you. But aren't you concerned about big issues like debt and deficits? You know, tax revenue doesn't look like it's going to be very strong. We continue to spend a lot of money. Doge didn't cut nearly as much as anyone expected it was going to, or at least as was promised. Aren't you concerned about the dollar's place globally?
Well, Matt, I live in Italy, so if you're talking about high deficit countries, then well, you can take a page from my book. But no, of course, those issues that you highlighted, the real issues, are very concerning. The point I'm making is if there is problem in U.S., other countries will feel it a lot more. And for whatever kind of challenges we see in U.S. economy, it's still stronger than other countries. And okay, maybe it lost a little bit of a momentum as a gap between where U.S. is in terms of economic growth and the rest of the world is kind of closing a little bit in terms of corporate earnings. Maybe it's closing a little bit, but U.S. is still a lot better and stronger economy than others. I mean, it's only been, 6 months when we saw Germany is in recession and Europe is struggling, and ECB is too far behind the curve and governments are not spending. Not a lot has changed in that regard. Okay, sentiment has improved. So yeah, I appreciate your points on U.S. kind of slowing, losing momentum a little bit, and that's reflected in investors. I mean, already reflected in price coming down, investors reducing their positions in U.S. But what is really interesting, over the last couple of weeks, we began to see investors coming back into U.S. stocks, not bonds and FX, but stocks. That's where we're seeing inflows, particularly in tech sector. Again, like stronger earnings in tech helped, and we're seeing investors kind of dipping their toes back into U.S.
Maria, real quickly, one more question for you. You mentioned that the risk is mostly to the upside still, but what would change your mind?
I mean, I mean, we can't wish away the uncertainty, okay? And we can't wish away the kind of policy changes that kind of upset the market. So what I'm saying is that investors have square up positions. They haven't gone underweight. They can, of course, do that. So I think we are kind of living on kind of a little bit on borrowed time, and one tweet, one through social post kind of upset that sentiment. But to me, that we already have quite a lot of pessimism priced in. If we stay where we are, markets start drifting higher. If we get some positive trade news, we get higher. But obviously, if negotiations on the weekend will come with nothing and trade war escalates, of course, that would be felt by the market.
Maria Weidman of Street, we thank you so very much for joining us this morning. To end the week, now let's get a look at some more stocks on the move this hour with Bloomberg's Denitsa Sekova. I know, Denitsa, you're looking, for example, at Cloudflare.
Yes, we're seeing quite a few strong earnings reports and reaction. One is Cloudflare. The stock is up about 9%. It's coming off very strong earnings reports and solid guidance, which obviously has been something that investors have been very worried about. Cloudflare has expanding portfolio of quiet-based security and compute offerings. That's helping. JP Morgan says incremental uncertainty drives prudence in the guidance we're seeing. We're also seeing an interesting reaction by Jefferies. They actually lowered their target based off this earnings report, saying that despite the great revenue beat, the operating margins were only in line with consensus. So obviously the bar is very high. The company is up 25% year to date, so you can imagine why people like Jefferies are more conservative here, but definitely a very strong day and strong year for Cloudflare.
I'm looking at TradeDesk, and I watch this stock pretty closely because my buddy Mark Douglas runs a company called Mountain, and we're always talking about, well, we're always saying they're about to go public, right? Maybe it's really going to happen now. And actually, the demise of TradeDesk stock this year was really something that made me think they got to push it off. But TradeDesk is doing very well today, up another 22%.
It's doing very well, really one of the strongest days. As you said, the stock is down 40% year to date. It's been under a lot of pressure, but what we're seeing is a pretty strong earnings report exceeding expectations, which I guess coming into this were not as high. The company said that the volatility in the economy is actually helping. We're seeing all those reshuffles in ad business and streaming that are happening at Google and Apple. And what we're seeing is that TradeDesk is actually potentially benefiting from that. We're seeing a lot of optimism. For example, Wedbush upgraded their targets. A lot of people are happy about the healthy second quarter guidance, about the first quarter results. And of course, they launched some new platforms. They did a lot of investments. So obviously, cheap price, investments, and people are getting optimistic that from here that there is some upside. And today is a pretty good showcase. I'm anchoring Bloomberg Business Week this afternoon. I'm filling in for Tim Stenevec, who's on like a day off or whatever. And Mark D was supposed to come on with me, but we put out that story this morning, and then he said, no, I can't now. I'm on a plane.
You know what's interesting about this, too? I've got to say, because I know you watch TradeDesk closely, so I was thinking about to say to you, the fact that they're doing well today is actually a great thing because people were so worried about advertising spending.
Exactly.
You know, another company that's not doing as well today, Monster Beverage.
Yeah.
Something.
Because of you.
I know. I drink a lot of Celsius. But, you know, my question is, it's actually not positive on the morning. But as far as tariffs go, do you think now that companies can, you know, of course costs are going up, but given that a lot of companies are already doing well, is this an excuse, right? I mean, if there are other things going on.
What, to raise prices?
Exactly.
Right, exactly.
Yeah, for sure.
We're actually seeing some consumer optimism when it comes to Monster. Morgan Stanley raised their target, and they say that they're seeing a lot of enthusiasm from consumer. And what we're seeing with markets and consumer is that things turn sour very quickly. So you can imagine just coming from very depressed levels, small upside in the reports really help. Of course, the stock had a small loss in earlier trading. Now we're seeing it flip, and perhaps the reaction we're seeing from analysts is a reason. The company is up 16% year to date, so even the initial reaction is not really a big thing. But they did indeed talk in their call and their earnings. They talk about global economic uncertainty. They talk about currency pressures and all that. So it is important, but I guess the worst case scenario is not there anymore.
They also have, do you guys watch MotoGP, the Motorcycle World Championship?
No.
What do you think?
Fabio Quartararo, sponsored by Monster, he's having a fantastic comeback.
That's the reason.
In the past few weekends. You know, Franco Morbidelli, Alex Rins. Okay, Denitsa, thanks so much for joining us. Denitsa Sakova, they are wrapping up some stocks. Coming up, Pinterest surges as the company's results ease concerns of an advertising slowdown. We'll discuss those results next ahead of our interview with the CEO of Pinterest, Bill Reddy. This is Open Interest.
Let's cut right to it. This is Bloomberg's new show, Primer. Technology is a $1 trillion game. Won, lost, won again, just by backing the right science at precisely the right moment.
My life has been focused on how can you elicit intelligence from brain cells in a dish.
This is the fundamental building block of our fusion technology.
We're doing things that have never been done by anybody, ever.
Everyone is selling the future. If you want to understand what's coming, you'll want to watch Primer, because details matter.
Lasers on?
So do lasers.
There we go.
Oh, and it's on all these lovely channels. Hope you're jotting this down.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
And it's time now for our top calls, some of the analyst action in focus this morning. And first up, we're looking at Tapestry, getting raised to a buy at Morgan Stanley. The Coach and Kate Spade handbag maker raised its annual outlook again, shrugging them off about a weakening consumer. Morgan Stanley called it a positive revision story. And next up, Expedia getting downgraded to a sell at Piper Sandler. Revenues and bookings in the online travel company had missed estimates, and the firm says Expedia's comments around U.S. travel was discouraging and suggests a tough slog from here. And finally, Lyft getting raised to a buy at Goldman. The ride-sharing company is reporting better than expected bookings in the first quarter, and Goldman sees compelling risk-reward for the stock, Matt.
All right, sorry I got a Ricola. Just finishing a Ricola here. It was a long night at the bar with all the school moms last night. Let's get to Lyft right now. We're joined by Bloomberg Technology co-host Caroline Hyde here on set. Sorry, I had kindergarten orientation.
Oh, it's exhausting.
I had a school board debate. I've had so much school district, and everybody goes to the bar after.
You're living the life.
These events.
I want to be you, Matt.
And take a Lyft home because you don't want to be drinking.
That's the kind of guy you are.
And driving. This company has done, it's obviously far smaller, but much better than its bigger rival.
In many ways, I mean, Uber's numbers were still relatively resilient, but they didn't live up to the expectations, and Uber's stock has soared so far this year. But Lyft is doing really well because it's slightly cheaper. And I think that's what really Mandeep Singh over at Bloomberg Intelligence is signaling out here. They've got a really loyal fan base that is growing. They've now got 24 million users and above, and the people are coming back time and time again because they're a cheaper offering. How long they're able to substantiate that, it seems as though the more products that they unveil, the more they're able to deliver on EBITDA. Their earnings were really resilient here. You're seeing like 79% increase in EBITDA, while revenue grows to about 14%. They're still signaling they're going to be able to do that in the next quarter as well. So resilient consumer, more new products, going abroad as well. They're bringing you a taxi offering. This is a company that's managing to fend off also that activist investor. Engine Capital have dropped their demands for changes at the board because Lyft has managed to acquiesce and say, sure, we're going to buy back more shares. And that's also what's helping pop the stock, I'm sure.
Also popping Pinterest today. I think this is so interesting because a lot of people...
Because you're using it.
I am. I'm using it a lot these days for certain reasons. But, you know, Pinterest actually is seeing large advertisers increasing their share of wallet.
Yeah.
In this economy, people are really watching how advertisers are behaving. Why Pinterest?
Well, it's interesting because they're managing more and more to be personalized when it comes to artificial intelligence. So they're also making the whole use case for an advert and for a marketer that much easier. You saw that with Meta as well. But I think when there's got worries about TikTok, they've been able to really take more and more market share. They're also trying to claim, and they claim it time and time again, when you go to Pinterest, you're looking to buy something. And so there's that much clearer and closer relationship that the advertiser is getting with you as a potential consumer. They're driving up the value because they're getting more people on board. Remember, this is a company that is adding monthly active users and then some, but they're also really managing to be resilient when we were worried about Shein. We were worried about Temu. We were worried about these Chinese retailers pulling back. That's not showing up in this quarter or the quarter that they forecast for. Unlike Snap, which couldn't give us a forecast, they've stuck and given us a forecast, and it looks pretty rosy.
So I have been using Pinterest a lot lately as well, by the way,
Why have you been using it?
because it's a great way to store recipes.
Oh.
I'm the guy who cooks dinner for the kids every night, so I store all my recipes.
You're out with the school moms, you're at the school board, you're doing the dinner. Matt, you're a dreamboat.
I was going to say,
what a
he's
modern
really
man.
shocked me in the last couple months.
I'm a super dad. I want to talk about Affirm. This company came out with earnings last night, and first of all, a testament to the CFO there in terms of guiding analyst expectations, because they did a perfect job, right? Revenue was bang in line. But they also slightly raised their forecast for earnings and for revenue.
But shares slump. Max Levchin and the CFO must be slightly bemused by why we've got the stock reaction. So are the analysts. In fact, Mizuho saying, look, they're raising their key metrics. This is a knee-jerk stock reaction, and they think it's going to fade. And Evercore is saying, look, underlying trends are really good here from the volume perspective, from the active customer perspective, and overall they're saying, look, maybe this is once again reflecting some lofty expectations. Max Levchin's going to be joining the show a little bit later, and I'm sure he'll talk to the resilient consumer. They're not seeing any pickup in terms of credit issues overall. We're all sat here waiting for the consumer to stop buying, and thus far they're not doing it.
It's interesting. Very excited for that interview. You are still seeing Affirm stock almost 20% on the year. However, Max Levchin doesn't tend to care about the stock.
Oh, funny that. The CEO never cares when they come on telly.
Well, they own a lot of it.
20%. Yeah, if you lose a fifth of the value of your company in, what, we're 5 months into the year? That's tough.
Yeah, but, you know, we'll see what he has to say to you, Caroline. We're looking forward to that interview. That is Caroline Hyde. Tune into Bloomberg Technology today. They have a trio of CEOs, Affirm, Lyft, and DraftKings. You know, my favorite is sports betting, Matt.
I know. You have a problem with that. You got to watch it. It's addictive.
I do. But also here in our next hour on Open Interest, we're going to speak to the Pinterest CEO, Bill Reddy.
With Caroline. She's coming back.
With Caroline. She's coming back.
The reason to continue watching
is Bloomberg Open Interest.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern, only on Bloomberg. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Bring you up-to-the-minute geopolitical news wherever and whenever it happens. I'm Anne-Marie Hordern in Buenos Aires, Argentina, and this is Bloomberg.
Now let's shift our attention to Wall Street South. Ken Griffin's Citadel has made a peculiar play in the talent wars being waged among the top asset managers, hedge funds, and banks in global finance, and that's by introducing a 4-year non-compete clause. Let's dive into the details with the reporter who broke the news, Anna Kaiser. You know, it's really interesting to see him do this. He is putting muscle behind lobbying efforts in Florida to get this non-compete clause brought up to 4 years in that state. How are people reacting?
Yeah, I mean, some of the criticism of this bill, this is a bill in the Florida legislature. This would become Florida law. It allows non-competes of up to 4 years. And, you know, some of the criticism is that it's just very employer friendly. It would, you know, give a lot of power over the employee in terms of, you know, giving them their job, and then they have to sign a non-compete, which would potentially mean that they couldn't work for up to 4 years after they left if they ever wanted to.
So I saw this initially, Anna, and I was thinking, cool, 4 years of gardening leave. Like, you continue to get paid and you get to just play golf or whatever. But there are some caveats, right? Because it's not all gardening leave and you don't get your bonus.
Correct. So, yes, it sounds like a very sweet deal, as you say, but the employer is only obligated to pay the salary, and, you know, at hedge funds, bonuses can reach into the millions. It can actually make up, you know, such a huge percentage of an employee's total compensation. So salaries actually may not, you know, might help keep the lights on, but it might not really maintain the lifestyle that you have.
But if you move out of Florida, Anna, can you work for another company? Is this only if you stay in Florida?
I think that would probably be up to courts to debate. You know, what the bill tries to say is that this actually expands beyond Florida, that this would be if your principal place of business is in Florida, this, you know, expands basically everywhere. You know, I would imagine that could probably be challenged in court, but that is what the bill says.
It is the most read story for a reason, Anna. Everybody wants to know these details. Fantastic reporting. Thanks so much for joining us. Anna Kaiser there talking about Citadel and potentially some new rules. Coming up the next hour, AQR's Jordan Brooks and Pinterest CEO Bill Reddy. This is Bloomberg.
We'll have to see over the next 3, 6, 9 months how the tariff discussions play out and what does it mean.
I do factor in some effects of tariffs now on inflation, on prices.
I like the idea of the 10% tariff across the board.
I've spent my entire career focused on fiscal discipline. I don't think these people have the foggiest notion what they're doing. And I think DOGE is doing tremendous damage to government.
Elon Musk is probably the inventor of our age, but who understands that we're in the midst of the most profound convergence among technologies.
When we are facing a once-in-a-generation technological disruption,
we cannot close this retirement gap without private-public partnership. We have to have good policy.
Do you think, Dawn, that the market is correct to be, as of now, pricing in 3 rate cuts in 2025?
I would take the other side of that bet.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you the latest in tech and AI news whenever and wherever it happens. I'm Tom McKenzie in Paris, and this is Bloomberg.
News on the Hour, sponsored by Progressive Insurance.
I'm Michael Wallace. Former Supreme Court Justice David Souter has died. He was a liberal vote on matters of abortion and church and state. When he retired from the court after 19 years in 2009, President Obama lauded him.
He approached judging as he approaches life, with a feverish work ethic and a good sense of humor, with integrity, equanimity, and compassion.
Obama chose Sonia Sotomayor to replace Souter. David Souter was 85. On his first full day as Pope, Leo XIV celebrated Mass with the cardinals at the Sistine Chapel, asking them to help him spread Christianity around the world. His older brother, John Prevost, told CBS Mornings he spoke with him briefly yesterday after he was elected Pope.
So we were able to talk for maybe 45 seconds, and I said congratulations, and he said, okay, goodbye, because he knew there were reporters in the house, and he's not ready for that yet.
Prevost says even as a child, his brother always wanted to be a priest. CBS's Elaine Cobb reports Europe is promising more help for Ukraine.
EU foreign ministers have pledged to free up more than $1 billion worth of frozen Russian assets and hand the money to Ukrainian defense companies. Meeting in the western city of Lviv, the ministers also approved the framework for a special tribunal to try Russian leaders for the crime of aggression against Ukraine.
In Russia, it's Victory Day. There was a huge military parade in Moscow to celebrate the 80th anniversary of the surrender of Nazi Germany in World War II. A U.S.-based aid group in Gaza is closing all its soup kitchens. Reporter Linda Gradstein is in Jerusalem.
The World Central Kitchen was serving more than 130,000 meals per day and baking 80,000 loaves of bread in Gaza over the past weeks, but said it was forced to suspend operations as it has no food to cook. Israel is facing growing international pressure to lift a blockade on humanitarian aid that it imposed in March, hoping to pressure Hamas to release the remaining Israeli hostages, both alive and dead. Israel says Hamas has been stealing the aid.
President Trump is hinting he may lower the tariffs on Chinese imports from 145% to 80%. Treasury Secretary Scott Bessent will attend trade talks with Chinese officials in Switzerland this weekend. The BBC's Laura Bicker.
For China, these talks are a fact-finding mission. Officials will want to sit across from Donald Trump's representatives and find out what the US president really wants. It is likely they will push for the 145% tariffs on all Chinese goods entering the US to be lowered or scrapped completely.
This is CBS News. The Trump administration plans to discharge transgender service members.
There are as many as 1,000 openly identifying transgender troops subject to immediate discharge, and an estimated 3,200 who aren't openly transgender but have been diagnosed with gender dysphoria, show symptoms, or are being treated. They'll be given 30 days to self-identify before being forced out of uniform. CBS News military consultant and retired U.S. Army Colonel Jeff McCausland thinks the transgender troops are being unfairly treated.
Transgender-related conditions are the only gender-related condition that requires a discharge, regardless of the fitness for duty of the individual.
Christopher Cruz, CBS News, Washington.
58 felony cases are being dropped in a small Alabama town after a grand jury ruled they were tainted by a corrupt police department. The police chief and 4 officers from Huntsville were indicted for removing evidence from the evidence room. Most of the cases involved drug charges. Michael Wallace, CBS News.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are 2 big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Good Friday morning from the Bloomberg Interactive Brokers Studio in New York City to our worldwide audience. We are streaming live as well, so head over to Bloomberg. Head over to youtube.com and search Bloomberg Live Podcast, and that's where you'll find us. Coming up today, we're going to get the latest on the whole China tariff, U.S., U.K. tariff situation. Sean Dunn and Bloomberg News senior economics writer. He's going to give us the latest reporting there. Henrietta Trez, managing partner and director of economic policy at Veda Partners. She is our go-to person for all things Washington, D.C. We'll see what's happening with some legislation. We got a big tax bill to get done. We got to keep the government open, all that kind of stuff that we're all used to. Elliot Stein, Bloomberg Intelligence litigation analyst. Here's a title of his note. SCOTUS would likely let Trump fire Powell even if the markets don't. I have no idea what he's talking about there, but I want to hear what he's got to say there. Ed Harrison, senior editor of Bloomberg and author of Bloomberg's The Everything Risk newsletter on economic looking ahead. What are some of the data we need to be focusing on? So we got a lot coming up in terms of economic data, corporate earnings, and policy as well. Let's kick it all off with Mr. John Tucker, NA Bloomberg Business Flash. John.
All right, the major stock average is pushing higher right now. The Bloomberg Business Flash right now being brought to you by IBKR. Will the year-over-year change in the U.S. CPI exceed 2.6% in April 2025? At IBKR Forecast Trader, the yes was recently at 26%. Start predicting today at ibkr.com/forecast. The last trading day for this contract is May 12th. The major stock average is again modestly higher. 9 of the 11 major industry groups in the S&P 500 up. Consumer and energy leading the pack. Insulet is the best performing individual stock in the index. This is the insulin delivery system maker. They boosted their revenue guidance for the full year. Meantime, Alexander Altman at Barclays says, you know what, the investors shouldn't hang their hat on any trade deal this weekend.
We're not going to get anything substantive over the weekend. And I would dare I say, Treasury Secretary Bessent has already kind of outlined that. And I think people often lose sight of the bigger picture. They're so focused on the minutiae. And actually, if you listen to what has been said by the administration, they said, don't expect necessarily anything dramatic this weekend.
Right now, the S&P 500, 25 points higher. That's up 0.5%, 56.89 on the index. The Dow Jones Industrial Average, 100 points higher. That's up 0.25%. And the NASDAQ 100 up 126 points. That's a rise of 0.6%. Apple working on new chips that'll be the brains for future devices, including their first smart glasses, more powerful Macs, and artificial intelligence servers. Ryan Reynolds new. This is for you, Alex.
Thank you.
MNTN. This is the advertising and marketing company backed by the actor Ryan Reynolds, launching their IPO maybe next week. This comes after tariff-induced market volatility delayed the plans. And finally, here's one for you. The market for reptile and amphibian pets booming, with 4 million U.S. households owning them. The market for their food and supplies hitting $800 million last year.
You know, funny point. When I was growing up,
little geckos, designer geckos, because they crossbreed. I don't know. Anyway, some of them are selling for $50,000 each.
So when I was growing up in the Upper West Side, there was somebody who had a pet iguana and would walk the iguana with like a leash and everything. And this thing was really big. And it was like, oh yeah, the iguana on a leash. It was a thing.
It's not really related, but I ran over a rat this morning on 10th Avenue.
That's,
it's not a...
That's not a reptile, but also you killed it, so there is that.
Thank
you, John. Thank you for your service. Okay. All right, I'm Alex Steele alongside Paul Sweeney. It's a Friday. This is Bloomberg Intelligence Radio. Market Driver is brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with a 2-to-1 advisor-to-staff ratio, small firm attentiveness, big advisor impact. Go to Commonwealth.com to learn about their consultative support and technology. Let's take a look at some of the stocks in the move today. I'm Alex Steele alongside Paul Sweeney. We're joined now by Bloomberg's Christine Aquino. You're looking at Microchip. What's going on with Microchip?
Looking at Microchip, Alex, that's having a good day today. Currently, the stock is up more than 13%, so extending those gains from the open. And that's because we did get the fourth quarter results after the bell on Thursday. Adjusted EPS slightly beating the estimates there, 11 cents versus 10 cents estimate. And we also saw net sales that were also slightly above forecasts, but were down 27% year on year. But the chips manufacturer did highlight a silver lining. They say that the fourth quarter, quote, marks the bottom of this prolonged industry down cycle. And analysts at Evercore are still rating the stock outperform and say that the company is exiting an inventory correction and entering a restocking cycle.
That's interesting. That's always important when it comes to those chip guys. Not doing so well, though, today is Expedia.
Exactly. Expedia down to just over 7% at the moment, pairing earlier losses at the open of as much as 12%. And that's because the travel outlook for this company specifically is not looking great. They did cut their full year outlook for gross bookings and revenue. First quarter results also missed estimates. And, you know, they were highlighting that there was weaker than expected domestic and inbound travel. A lot of that apparently potentially related to the near 30% decline in inbound bookings from Canada, which contributed to a 7% drop in overall inbound travel to the U.S. Now, we did hear from Booking and Airbnb, kind of like comparable companies for Expedia. Both of those top estimates for the first quarter results, but they also issued weaker than expected second quarter guidance.
Bucket list item. I just decided last night, Kentucky Derby.
Ooh,
and
that's a good one.
And we just had our person come back to us. It's not cheap. Dude, it is expensive.
Yeah. How much are we talking here?
Just to get your nose in the door without airfare, the cheapest option was $4,000.
Whoa, per person. Wow. Yep. And that doesn't count the hat, right?
It's 3 days. I mean,
it's 3 days.
Yeah.
Right.
So, but it's we'll think about it.
We'll think about it. I mean, but that's why it's a bucket list.
That's why it's a bucket list.
That's why it's not an every day occurrence.
Yeah.
All right, let's wrap it up here with CrowdStrike.
Look at CrowdStrike today, down more than 2% at the moment, and those shares are declining after a Bloomberg News exclusive report that U.S. prosecutors and regulators are investigating a $32 million deal between CrowdStrike and a tech distributor. And the transaction was apparently due to a deal to supply software to the IRS, the Internal Revenue Service, but apparently the IRS never purchased or received products, according to our sources. And so investigators are now questioning former employees, and they've also obtained internal CrowdStrike records. I'm sure reporters are all over the story, so keep an eye out for more exclusives from that team.
All right, Christine, thank you so much. Appreciate that. Christine Aquino, she is a managing editor for Markets Live. Joining us live here in our Bloomberg Interactive Broker Studio. We got a little bit of green on the screen. A trade team heading over to Switzerland today for trade talks with China. And President Trump out today with a tweet saying 80% China tariff, quote, seems right ahead of the talks. So we'll see how that plays out. Sean Donnan joins us. He is senior economics writer for Bloomberg News. He's based down in Washington, D.C. Seems right. I don't know. I'm not sure where that number came from here. Sean, what are expectations going into some of these trade discussions with the Chinese in Switzerland?
Look, the administration from President Trump on down has made very clear they want to do some de-escalation this weekend, and that they want to bring tariffs down from the 145% plus level that they're at. We had heard in recent days below 60% was something that they're targeting. The president's out with 80%. But look, the thing to keep in mind here is even if we get what would be a dramatic de-escalation, dramatic reduction from 145% to 80% or 60%, those levels are still incredibly high,
right?
And they're still going to be prohibitive for a lot of trade. And, you know, the folks at Bloomberg Economics have been running the numbers, and you still get plenty of damage to the U.S. economy, to trade, to the Chinese economy. Those are not good numbers. I mean, it speaks to how far we've come in the last month. You know, it was literally a month ago today that these reciprocal tariffs went into place from President Trump, and then he had a bit of a U-turn and put on a 90-day pause. But the window on what is being discussed has shifted remarkably over that time.
Well, and that's what we forget kind of yesterday, too. Like, even though there was a deal with the UK, like those 10% tariffs are still in effect. They're still there. What was so interesting, though, is that he also said that it's up to Bessent. Why? Like, what do we make of that? And is that a good or a bad thing as far as markets are concerned?
Well, look, I mean, Bessent's the guy for now, right? I mean, he's leading the delegation there, and President Trump has moved around. I mean, a few weeks ago, it was Howard Lutnick who was the guy, right? And on China and other things. It looks like the Secretary of Commerce is now dealing with other countries, and there's a lot of negotiations going on there. Scott Bessent is the man of the moment this weekend. He's being joined by Jameson Greer, who really is the trade wonk in the mission. He's the U.S. trade representative, of course. So look, you know, one of the things we learned in the first Trump administration is President Trump has lots of emissaries, and he often shifts emissaries over time. So let's see what Scott Bessent comes back with. Let's see what President Trump makes of it, and let's see where the talks go from here.
What's the current thinking, Sean, about when will consumers feel this? Gene Soroka, who runs the Port of LA, was in our studio last week, and he said bookings for this week, sailings from China into his port, are down 30 to 35% for this week. When's that going to reach consumers?
Look, it's going to reach consumers soon. I mean, I think, you know, we had new trade numbers out of China today, and exports from China to the U.S. are down by 21%, or were down by 21% in April, and they're only going to get that. You know, they're only going to continue downward from here, even if we get some kind of de-escalation at the weekend. So the one thing that is kind of pushing back against the impact for consumers is that companies have built up a lot of inventories. So you talk to companies and they'll say, we've got 3, maybe 6 months worth of inventory there, and that might get us through. So we're going to see empty shelves, but not all the shelves are likely to be empty this summer.
And then it becomes a question of when do we see those jobs be cut? So if you don't have the volume coming in, do those dock workers get scrapped? And that was a question posed to President Trump yesterday, and he's like, well, good, because the long term it's going to be good for America. But what's that trickle down going to wind up looking like?
Yeah, and we're already seeing job cuts, and you know, we're also seeing hiring slow down. And I think that's the other thing to remember is a lot of the uncertainty around trade isn't necessarily about cutting jobs or closing factories in the short term. It's about not expanding factories.
Right.
It's about not growing. It's about not hiring more people, and that, of course, is what's really toxic for the economy.
Yeah. All right, Sean, we got to leave it there. Thanks a lot, Sean Donnan, joining us. He heads up all trade and economic coverage for Bloomberg. All right, coming up, Henrietta Triss, Managing Partner and Director of Economic Policy at Beta Partners, will be joining us for Take on what to look for over the weekend. Plus, George Ferguson, Bloomberg Intelligence Senior Aerospace, Defense, and Airlines Analyst on AIG, ordering some large jets from Boeing and Airbus. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash, being brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half. If you move to Oracle Cloud Infrastructure, this is for new U.S. customers with minimum financial commitment. The offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. The major stock averages almost unchanged for the Dow right now. They are moving slightly higher. The S&P 500, if it keeps this up, is on track for its third straight week of gains. That would be the longest winning run in 2025. Investors looking to the weekend as the U.S. and China trade talks get underway. Here's a fun fact from Bloomberg Intelligence. The average member of the S&P 500 made 6.1% of its revenue from selling goods to China or to Chinese companies in 2024. Anyway, whatever that's worth. Travel may be slowing down. Expedia cutting its full-year outlook for gross bookings and revenue. And the travel booking company also saw a near 30% decline in inbound bookings from Canada. Shares right now down 8.5%. Yesterday, after the close, Lyft reported better than expected gross bookings in the first quarter. They pointed to its expansion in less densely populated markets like Indianapolis. Lyft shares, they are up 22%.
Yeah.
And then Microchip Technology shares trading higher. The company reporting fourth quarter results. The period, they say, marks the bottom of the prolonged industry down cycle. And right now, those shares are up close to 13%. Overall, the S&P 500 up 6. The NASDAQ Composite Index is up 50 points. And the Dow Jones Industrial Average looks like it's about to turn negative, unchanged right now. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash.
I arbitrage, John, between Lyft and Uber.
I've started doing that too now, actually.
And that has
huge savings.
Oh, okay.
Like 30%, 40% sometimes. It's
Well,
crazy. It's the same driver,
my
same
Uber
car.
driver, and I never do Uber, but it was a New York City cab that showed up. And the guy said, always just hail a cab. He says it's much cheaper.
Yeah, but sometimes you just can't.
Yeah, sometimes you can't. But I mean, Matt Miller doesn't do it. He just goes right to Uber every time, and he's just leaving money on the table. I don't understand that, but I'm a big ARB guy as it comes to the ride hailing.
I mean, how much savings would you say for one
Again,
ride?
20-30%.
Yeah, it can be significant.
I can't imagine how that exists, but it's just different
Because
algos,
Lyft
I
helps
guess.
subsidize, isn't it? I mean, isn't that the point? Which is, I'm trying to find margins for Lyft and how they did yesterday.
It's
Then
crazy.
You need to come up with an app that will do that
arbitrage. Exactly.
Oh, dang.
Exactly. All right, I'll get on that. All right, let's go down to Washington, D.C. We've got a lot going on there. Henrietta Trez joins us. She's a managing partner and director of economic policy at Veda Partners. She lives in Louisiana. How cool is that? I think New Orleans. That's awesome. Hey, Henrietta, I mean, from your perspective, and you talk to your sources in Washington, should we expect anything coming out of Switzerland this weekend as it relates to U.S.-China trade?
Yeah, it's a good question. Obviously, the president outkicked his coverage here with the 145% tariffs on China. The problem is 80%, which he's talking about now on Truth Social, is still prohibitively high and doesn't really move the needle for small businesses or anybody importing from China or overseas right now. So the expectation I had going into this before the president started tweeting this morning was effectively that Secretary Bessent is trying to establish himself with the vice premier of China at these meetings in Switzerland this weekend. Historically, what we know from China and what we've gotten from MOFCOM in the last couple of days is that they are extraordinarily cautious and not at all optimistic about whether Secretary Bessent is able to speak for the president, whether the United States is serious about actually reducing tariffs. And so the president is trying to, give Secretary Bessent effectively the permission structure that China needs to enter into the conversation in any kind of meaningful way.
So
Sorry.
Yeah, so did he do it by saying 80% looks good and it's all up to Scott? Was he able to accomplish that?
I think that from a directional standpoint, it's pretty clear now that Secretary Bessent does have this authority to go to 80%. Whether he has the ability to go further than that, I think, is not something that China can necessarily accept, because obviously the president, through this tweet, is the one who actually set the terms of what's going to happen, not Secretary Bessent. So it does undermine the secretary a little bit. And I think what we should hope at best case scenario is some sort of joint statement, which we don't often get. Usually the U.S. will put out a statement and China will put out another statement, sometimes hours or even days afterwards. And they're very short, they're very curt, and they effectively say, we met. And that's sort of the best that we can hope for going into this before the president tweeted about it. I think that what we'll see now is the business community come out and say, hey, 80% is still too high. We need this to come much, much lower, if not all the way off, which the president does not seem inclined to do.
This trade policy that President Trump is deploying, how is that good politics?
I think the supporters of President Trump really like the tariffs. They like the sort of sticking it to the man mentality. And so even though you're seeing the polling drop pretty materially, even with Republican voters, his core base, I think the last time I saw numbers, it was like 43, 47% of the Republican conference is very supportive of the president's tariffs and his strategy. And they're willing to give him this opportunity to wait and see. But on Capitol Hill, you have absolute panic. It's sort of like ducks sitting on top of the water and then furiously paddling underneath. The Republican Party trying to write this tax bill is running into the reality that tariffs do not raise $2 trillion if they do not bring in revenue. And of course, if you stopped imports, you're not bringing in tariff revenue. So there's a lot of panic on Capitol Hill.
So clearly, though, the narrative is trying to be shifted to lower taxes, I guess, as long as you're making under $5 million as a couple, and also deregulation. Like that desperately seems to be the narrative that needs to be shifted for the administration. Is that happening? Like, is that legit?
Well, that's interesting. The one thing I'd touch on with this $2.5 million for individuals and $5 million for couples filing jointly, this new tax policy for the president, is that, you know, he's the ultimate salesman, right? And he recognizes that this tax bill has a serious image problem. And the image is one that the American public is really primed to notice, which is cuts to Medicaid. You know, we have been talking about Medicaid cuts for 20 years now, since Obamacare. It's something we talk about on our Wednesday webcasts. I wish we could move on from it, but the American public is so attuned to any cuts to Medicaid that they sort of viscerally react negatively to any tax bill that would include those data sets. So in this circumstance, the president has realized that supporting taxes on the wealthy is actually very popular. And this is a great way to sort of reimagine the tax bill and potentially get more support for the package from the American public. But obviously the Republicans on Capitol Hill do not like that idea.
All right, Henrietta, thank you so much for joining us. Appreciate your time. Always, Henrietta Trez, Managing Partner and Director of Economic Policy at Veda Partners, coming to us via New Orleans, via that Zoom thing here. There's a lot of stuff going on in the world of airlines, aerospace. Red headline crossed the Bloomberg terminal just moments ago. Radar screens at Newark Airport went black at 3:55 a.m. Friday. That's not a good thing.
No.
Again?
No.
Again. I don't know what's going on there. Granted, I fly in and out of Newark all the time, but come on, fellas, let's figure out what's going on.
Apparently it was brief, but like, what does brief mean when you're in the air? That
brief, when you're landing a plane, you know, that's an eternity.
Well, John, I've got my Flight Radar 24 app, so I can see where all the planes are and all that kind of stuff. So I can maybe help out a little bit. But George Ferguson, he does this for a living. He covers all the aerospace companies, the airlines companies. George, talk to us about just the state of our air traffic control system. You've seen this, you lived this, you've talked to all the companies. Is it unusually bad now? Is it different? What's going on?
So I don't think it's unusually bad now, but I think it's sort of always way behind the times technologically. I think, money gets thrown at it from Congress to Band-Aid it, get it through the next, couple of years, decade, who knows. And so they're always working, again, with this older technology. And I think it's a job where people aren't clamoring to get into it, right? There's a fair amount of stress. You're managing airplanes full of people's lives as it's skidding around the U.S. airspace. I don't think young people find it exciting during the pandemic. You couldn't do it from home. You'd have to go to a air traffic control center to do it. And so, the job sort of interest is probably a bit on the wane, and they don't get paid a lot of money to do it. And so it's challenging, I think, to keep the airspace, safe and sort of well managed.
I mean, it feels like that's an important part, though. Isn't the Trump administration trying to fix a lot of that, though? How is the hurdle rate?
Super important. And so I think that the Trump administration has talked about doing a whole revamp of the system, which is long overdue. I think the challenge, though, is the money. I think you're talking, I've heard 20, 30 billion dollars thrown around. You're talking a lot of money and a number of years to get it done. And again, the country always seems to have another priority. But I think, air travel is critical to the U.S. economy. And obviously safety means more people will use it. So I think it's a super critical issue, one that's not going to get fixed overnight and one that's been deteriorating, over multiple presidential administrations. So this isn't sort of Biden's problem or Trump's problem. This has been, throughout time, one of those places where Congress just sort of short shrifts on money.
In other aerospace news here, I see that IAG, which I think British Airways and Aer Lingus, they're buying they put in an order for 32 Boeing 787 aircraft for British Airways and 21 Airbus A330 neoplanes for Aer Lingus, Iberia, and Level brands. I mean, these are big wide-body aircraft. These are $10 billion is the investment here. It seems like the airlines are still pretty bullish long-term.
So look, everyone has to refresh fleets, right? And so, and it's their business, right? And so I wouldn't, that's the business. I wouldn't be, I don't know if is unbullish a word. I wouldn't be unbullish. They always have to sort of, be refreshing. By my count, though, 30-some 787s isn't the 10 billion that we were promised yesterday. So I got to believe that there's more to come. Look, I think my guess is that IAG, again, is British Air Lingus, Iberia. They ought to have a pretty good summer season along with the U.S. airlines as we continue to see good traffic between the U.S. and Europe. I think that's a secularly rising, market for both U.S. and European carriers as Americans, Europeans sort of constantly going back and forth across the Atlantic, wanting to see the old country or the new country. So I think it's a great business. Plus, British Air will connect you into the rest of the world. But going back to, I think, our tariff discussion yesterday, 30 787s don't add up to 10 billion. So I wonder if there's more to come or if we were doing everything at list price or something like that. I'm not sure.
Before I let you go, 30 seconds. After earnings came out, what's your favorite airline right now?
Look, I still think that the big U.S. full-service carriers, especially United and Delta, are really poised financially to take the opportunity they'll get this summer of continuing strong demand across the Atlantic. And I think premium travel is still the place to be. So that financially, those guys should see the gains.
All right, George, really appreciate it. Always the best. Thank you so much for joining us. George Ferguson, Bloomberg Intelligence, Senior Aerospace, Defense, and Airlines Analyst. All right, coming up, apparently this is Paul's favorite story. He's been talking about it for 2 days. Can Trump fire Powell even if markets don't like it? Elliot Stein, Bloomberg Intelligence litigation analyst, will be joining us on what SCOTUS would actually do if Trump tried to do that. We'll break that down for you on this relatively calm Friday. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Major stock averages, they are now drifting lower. Investors might be on hold as those high-level U.S.-China trade talks take place in Switzerland over the weekend. Meantime, Jay Woods of Freedom Capital Markets says, you know what, investors still waiting for the veil of uncertainty to lift.
This uncertainty theme continues until we get some clarity. We may get some clarity on data next week, but what we're looking for is clarity out of Washington.
Yeah, right now, the Dow Jones Industrial Average falling 111 points. That's down 0.3%. The S&P 500 has turned lower, down 13 points. That's down 0.25%. The Nasdaq 157 points lower, and that is down 0.3% right now. Best performing stock in the S&P 500, that belongs to Insulet Corporation. That's up over 17%. The ticker symbol PODD, again, 17% higher. The company, the medical device company, reporting stronger results for the latest quarter than analysts expected. Lyft rallying after delivering a stronger profit for the latest quarter than expected. Revenue did fall short. The company said it reached the highest weekly ridership levels in history during the last week of March. Those shares 21% higher. Advertising slowdown? What slowdown? A Pinterest revenue guidance topping estimates. The company says the ability to leverage AI to personalize user experience sets them apart. Pinterest up 7.5%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Paul and Alex.
All right, thanks so much, JT. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top news in business, economics, and finance through our lens of our Bloomberg Intelligence folks. They cover 2,000 companies and 130 industries all around the world. And joining us now is one of them. Elliot Stein is senior litigation analyst for Bloomberg Intelligence. A great piece out talking about how the Supreme Court would likely let President Trump fire Fed Chair Jay Powell, even if the markets don't like it. So let's get to kind of the precedents here. How is it constitutional that he's able to do that?
Well, we're not sure yet, but the way,
in theory,
the way the law is playing out is, he's taking a very expansive view of executive authority and what the president can do. We see it with the tariffs, we saw it with DOGE. He's taken a lot of actions that presidents haven't done before, and they're being litigated. And one of the things that he's done is that he has tried to exert a lot of control over what used to be called independent agencies. So things like the FTC, the Federal Trade Commission, the NLRB, the National Labor Relations Board. He has removed commissioners at these agencies, even though the statutes that govern these agencies have what's called a for-cause removal restriction, meaning the president can only remove them for cause. And he's just, firing them at will. He's also obviously threatened to do the same with Jerome Powell and maybe other members of the board. And his view is that the for-cause removal restriction is unconstitutional because it impinges on his power as the president under Article 2 of the Constitution to essentially oversee the entire executive branch. And the Supreme Court in 1935, there's precedent saying those for-cause removal restrictions are constitutional, but more recently, the Supreme Court has sort of tried to narrow that precedent and said, at least with a couple agencies where you only have one director, those for-cause removal restrictions are unconstitutional. And so the President Trump, is sort of trying to expand that recent precedent to these other agencies.
So do we have other, so the Federal Reserve is one thing. Do we have other agencies that are in the legal process now where someone's been removed and we have a suit?
Yeah, exactly. We actually have quite a few of them.
Okay.
He has fired 2 commissioners at the FTC. Those are in litigation. Sort of the most procedurally advanced cases at this point are cases where he fired commissioners at the NLRB, the National Labor Relations Board, and also the Merit Systems Protection Board, which sort of oversees federal employees and whether they're being fired and hired for merit or not. Those 2 cases, we have actually several rulings, and what's interesting is that the judges in those rulings sort of fall along ideological lines in how they rule. So the trial court judge was a judge appointed by President Obama, and she said that the firing of those commissioners was improper, that it was, it violated the for-cause removal. Those cases are now on appeal. There's going to be an argument next week, but we have sort of preliminary rulings from the appeals court. One panel of 3 judges, 2 of whom were appointed by Republican presidents, said that President Trump would have been likely to succeed on the merits. But then that ruling was then revisited by the entire court, which is dominated by judges appointed by Democrats, who said that the firing was improper. So we're sort of seeing how this might play out.
Are we really in a truly partisan judicial world, or is this just simply different interpretations or stricter or looser interpretations of the Constitution?
It depends on the issue. I would say on this issue, it seems like the judges are essentially ruling along ideological lines, where you have judges appointed by Republicans saying that the for-cause removal restriction really does impinge on the president's executive authority. And you have judges appointed by Democrats saying, it's okay to put some limits. The for-cause removal restriction would still allow the president to fire someone if they did something improper.
Timing of some of these cases, when are we going to get some clarity, you think?
So next week we have a key hearing in the NLRB and Merit Systems Protection Board hearings. That's at the D.C. Circuit, which is sort of considered like the second most important court in the land after the Supreme Court. That's going to be just a panel of 3 judges, again, 2 of whom were appointed by President Trump, actually. So I expect that panel to rule for the president, after which point the commissioners will ask the full D.C. Circuit to review it. I expect that ruling to go in favor of the commissioners. That will probably come sometime in the summer. And then at that point, I would expect the Trump administration to ask the Supreme Court for review. But with all that said, there's this thing called a shadow docket at the Supreme Court. So some of these sort of more preliminary issues are already starting to surface at the Supreme Court. So there's a chance they take it earlier than I expect, but most likely it'll be in the fall.
So in terms of, say, the Supreme Court issuing a ruling that then is ignored, is there precedent for that, like over history?
Well, we've actually sort of seen it with TikTok, right? Where the Supreme Court upheld the TikTok ban, and the president instructed his attorney general to ignore the ruling and ignore the ban. So we have sort of started to see some issues like that. But in this case, I expect the Supreme Court to, if he on this issue generally, I expect the Supreme Court to side with President Trump.
Interesting. So what happens when a president defies the Supreme Court, like in TikTok? Nothing, right?
So far, nothing.
So TikTok's still up and running?
The remedy is for Congress to impeach the president and then the Senate to convict. Highly unlikely in this political environment.
But he also like pushed out right? Like it sort of feels very blurry. It doesn't feel like he completely ignored it. It's just like, we're working on it. We're just pushing out the deadline. That feels a little different.
That's essentially what he's doing. But at the same time, there's a law that Congress passed that said, it has to be banned by a particular date. The Supreme Court upheld that law, and he's essentially ignoring the details of the law. I agree with you. He is using that as a reason, but the law is still on the books, and it's in violation, essentially.
I just feel like the lawyers always win. It just feels like there's always stuff to litigate.
Says the banker.
Says the banker, yeah. All right, the banker, I would leave my office at midnight.
Okay.
After drafting all that night. And then I'd get back into my office the next day, say 9 o'clock in the morning, and we'd have a fax on my desk. That's back in the day of faxes.
Sure.
Where Elliot and his counterparts were working on the stuff we drafted and faxed it back. And it was timestamped like 4:32 a.m.
Oh, yeah. As a legal assistant who worked at night, I did those faxings. I did that.
Always be billing. That was the motto.
Yeah. Oh.
But who made the most money?
Bankers.
Hello.
Yeah. Clearly the legal assistant.
You made the wrong. I say this to lawyers all the time. You could have zigged when you came out of undergrad, and you zagged.
I don't disagree.
You went to law
school.
All
right, Elliot. Thanks a lot, Elliot Stein, Bloomberg Intelligence Litigation Analyst. All right, coming up, Edward Harrison, Senior Editor at Bloomberg, will be joining us on his Everything Risk newsletter. This is Bloomberg.
listening to Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Friday. We made it to the end of the week. It feels like a very quiet day in comparison to some of the headlines throughout the week. We'll see what the weekend brings with those China-U.S. meetings in Switzerland. Last night, Commerce Secretary Howard Lutnick joined Bloomberg after President Trump announced the U.S.-UK trade deal. When asked about the upcoming talks with China, he said the administration's focused on fair and reciprocal trade and that EU's deficit with China and its surplus with the U.S. is one of those interesting sticking points.
Our view is going to be whatever the tariff results on China should be their tariff on their business with them. Now, probably the most interesting country I can tell you that has a huge trade deficit with China and a huge trade surplus with us is the European Union. And no one thinks about that, but a huge amount of the European Union is really a tariff arbitrage from China through the European Union into the American economy.
That was Howard Lutnick, Commerce Secretary, joining Bloomberg yesterday. Edward Harrison joins us now. He is head of Bloomberg, senior editor at Bloomberg, and author of Bloomberg's The Everything Risk newsletter. Edward, I read your stuff all the time, every week. Your newsletter, it's always really great. Bank of America, Michael Harnett, came out and said the U.S. stock rebound's probably over as the tariff optimism has been priced in. Do you agree?
Yeah, I think that we're getting to the end of this rally. We're getting very close to near the end, Alex. And one of the reasons is because we saw the price action this morning, very good. But then when we heard some bad news from China, which basically pushed back, the market reacted negatively. And I think that's representative of the concept that we've baked in the 10% tariffs across the board, but there's a lot of angst about what comes on top of that 10%, particularly with China and the EU.
So, Ed, what do you think realistic expectations should be for these talks this weekend between the U.S. and China in Switzerland?
You know, I think Trump, he set a pretty good baseline there with the 80% as potentially a level that we could get after this is over, and then hopefully we'll see more movement beyond that as the days go. But obviously the clock's ticking. 80% is not a very low number, and it's, you know, people might even call that an almost an embargo. But it does show a de-escalation, which means that even though the clock's ticking in terms of getting something that's more substantive, we could get to something of that nature. And you know, something like that might allow the markets to tread water. Anything less than that, I think that angst about how difficult China and also the EU will be comes back into play.
On the flip side, if the optimism is sort of priced in, is a baseline 10% tariff priced in? Because that seems to be saying no matter what.
Yeah, I think that, you know, you could make the argument that it's priced in. When you look back at the price actions since February, I think it was in mid-February that we got a delay of the tariffs, the reciprocal tariffs that were eventually revealed on April the 2nd. And that's what caused us to go to a record high. Everything that's happened since then has been a sense of dread about those reciprocal tariffs. And I think that we're about, 6, 7, 8% down from those levels across different indices. And that's enough to the degree that that 10% across the board gets you a growth recession, as opposed to an actual recession, which is potentially where we could be headed.
Ed, if that's kind of the backdrop here, what, if anything, can the Fed do here to counteract it?
I think that the Fed can't do anything, to be honest. One, it acts with a lag, so anything that it does won't trickle through to the economy fully until time later. So anything that it does now won't actually impact the economy fully for 6 months, 12, 18 months. The second thing is that they really don't know, as Jay Powell told us, they don't know what's really going to happen with the employment market, with inflation. And so their best bet is to just stay on hold until they see those things move one way or the other. And we're not seeing any movement in terms of the employment market as a result of tariffs. And I don't think that we will see any inflation numbers, even though we get 2 inflation numbers next week. Those are all like pre-tariff stuff. So we really won't get anything that will cause the Fed to move until, say, June, July. And by that time, if they do move because things are bad, it may be too late. It probably will be too late.
So then that raises the question, like, what's the next catalyst? Because we have the 90-day relief ends the beginning of July. You just mentioned it's going to take at least 6 more weeks to things to kind of feed through to some of the hard data. And it looks like the market's pricing in its first real cut from the Fed in September. So do we just like go chill until July?
Well, the whole sell in May and go away thing kind of, when you say that, Alex, makes me think about that dictum.
Yeah.
Really, from my perspective, it's the ball's in Trump's court because obviously he's hemorrhaging support in terms of the polls, and the market hasn't gone down. I think the combination of the polls and the markets together are the kind of thing that will galvanize more capitulation. I mean, we've seen him climb down a lot, 80% as an example, from 145 as a climb down, but you're going to have to see a lot more pain in the market to get him to climb down even further.
All right. Ed, thank you so much. We appreciate it. Ed Harrison, team leader for the Americas there, Bloomberg News from Washington, D.C. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts right now. We've got the S&P absolutely unched on the day. The Dow's down 75 points. NASDAQ's up 3 points. This is Bloomberg. Good morning.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Friday, everybody. We made it to the end of the week. I'm Alex Steele alongside Paul Sweeney and John Tucker. This is Bloomberg Intelligence Radio. We have a great hour lined up for you. We're going to take a quick check-in here on gold and commodity prices. If we do wind up having farm and ag stuff part of any kind of trade deal, what does it mean for the farmers and for things like corn? We'll break that down with Mike McGlone, Bloomberg Intelligence Senior Commodity Strategist. Plus, it's Friday, so we got Munis. Danielle Moran is the Muni Finance Team Leader to join us for the state of the Muni bond market. Mandeep Singh, Bloomberg Intelligence Senior Tech Industry Analyst on CrowdStrike. Also Lyft. I was emailing with him about sort of how Lyft managed to keep their margins steady and their business steady as well. And Shaheen Contractor, Bloomberg Intelligence Senior ESG Strategist joining us. But let's kick it all off right now with the Bloomberg Business Flash with John Tucker.
Okay, increasing levels of skepticism at this point. Investors expressing that over the trade talks over the weekend that are supposed to take place between China and the U.S., wondering now if there are going to be any positive results. So the major stock averages, they have turned lower to unchanged right now. S&P 500 down a point. The Dow Jones Industrial Average, 81 points lower. That's down about 0.2%. The NASDAQ 100, that's up only a point right now. You have bonds edging higher in price. Will the dollar halting its two-day rally? Max Kettner at HSBC Bank does remain cautious on stocks.
Pretty much all the leading indicators that we are tracking are really pointing south. And that is not south in terms of, oh yeah, it's a little bit worse, but we're talking COVID levels or we're talking financial crisis levels.
Communication Services worst performing industry group in the S&P 500. That is home to Google parent Alphabet, down 1%. Google, among other things, facing a potential $3.3 billion antitrust lawsuit in Europe. The equity market regime model, this is a Bloomberg Intelligence model, has entered a phase historically associated with the worst return prospects for the S&P 500. And it is worth repeating that the first official hard data after the trade war escalated shows Chinese imports to the U.S., they slumped 21%. And we were talking to the head of the port of Los Angeles and Long Beach, saying he was expecting we'll see shortages on store shelves in the not-too-distant future. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Alex and Paul.
All right, John Tucker, thank you so much. We appreciate that. Alex Steele with Paul Sweeney. We are live here in our Bloomberg Interactive Broker Studio. We are streaming live on YouTube as well. Let's take a look at some of the stocks on the move today. I'm Paul Sweeney, along with Alex Steele, and we're joined by Bloomberg's Christina Aquino.
Hi there, Paul. Well, let's take a look at Lyft, shall we? Because that is up more than 20% at the moment. We did get results after the bell on Thursday, better than expected gross bookings in the first quarter, which really marks a contrast with the disappointing results from Uber that we got earlier this week. So Lyft announcing an accelerated and expanded share buyback program. I'm sure that's music to a lot of investors' ears. And the company highlighting some key areas for expansion, which apparently includes Indianapolis, where it saw a 37% gain in rides. In Canada, where rides are up 50%, apparently.
Interesting.
It is interesting. And I was talking to Mandeep about that, too, and just the idea that actually they're just doing a better job of cost cutting.
Yep.
That they're just so undervalued at the end of the day. What else are you looking at?
Looking at Pinterest today, Alex, that is also enjoying a nice update today, up now more than 8%, so extending those gains from the open. We also got results yesterday after the bell, second quarter revenue guidance beating estimates, and they're really showing that they're leveraging AI and reaping the benefits of that. Their CEO, Bill Reddy, citing that ability to personalize the user experience as their, quote, key differentiator. And apparently their technology allows them to provide advertisers with early signs of trends before it even shows up in purchasing data, which is reason enough for a lot of their big accounts to increase their share of wallet with the company, according to Reddy.
I'm not a Pinterest person.
That's so surprising.
And I'm going to go out on a limb and say John Tucker's probably not one either.
Wow.
Never heard of him.
Shocker.
It's not too late to be one. It's very fun.
It's so cool. It's so fun.
Cool.
It's so fun.
You can use it for haircuts that you want to outfits.
No, that's not his thing.
Any of this appealing to you?
Bathroom remodeling, cool.
Just did it.
Cool places to go in, I don't know. What are you going again this year?
We're thinking about the
Kentucky Derby.
Okay, so then you're like, where to stay in a Kentucky Derby? Like cool hats to wear,
What
like
to wear,
fun
yeah.
outfits.
Oh, please.
What else you got, Christina? I'm not sold.
I'm saying the wrong thing.
You're not really selling this.
No, not sold. All right. Well, we're also looking at 1-800-Flowers. That's not having such a great day today, down more than 20% currently. That's because it withdrew its guidance for the near term, also shuffling its management
What,
team.
ahead of Mother's Day? They're down?
I know. I was going to say, but apparently they're not doing too well. Maybe Mother's Day will help them turn it around. But yeah, they're naming a new CEO. Looks like a pretty big revamp here.
We used to have this guy, Jim McCann, the founder and CEO, in all the time for like Mother's Day. And things like that.
Today.
Yes. Okay.
Yeah, so maybe they're able to turn it around for the next quarter. But yeah, it's very much a negative story for that company. And the decision to withdraw the near-term guidance also reflecting, quote, unpredictable external factors affecting the current macro environment.
I don't know. I mean, it's based on Long Island. I don't know, the flower business, I never understood how big that business is.
It's so huge.
It is just a huge, huge business. But I like the fact that he kept the name 1-800-Flowers.
Well, Jim passed it to his son, I think, became CEO. And so now I guess he's being replaced. So.
All right,
well, but I mean, they import so much, right? So there's is there a big tariff risk here? I'm just trying to pull up the actual earnings announcement to kind of look into it. Anyway, you would think that there would be that issue.
Yep.
Cool. Good stuff. Thank you. Appreciate that, Christine. All right, Christina Aquino, I'm still thinking about Pinterest and flowers. She heads up our Bloomberg MLive team. For more conversations just like this, listen to our new Stock Movers podcast. Subscribe for 5-minute episodes on the biggest winners and losers in the stock market. Listen to Stock Movers on Apple, Spotify, and anywhere you get your podcasts. All right, let's get to the commodity market. Mike McGlone, Bloomberg Intelligence Senior Commodity Strategist, joins us now. Hey, Mike, we saw that trade deal yesterday between the U.S. and the U.K. involve ag products, whether it's demand machinery, whether it was beef, whether it was ethanol. And I'm wondering what could be the benefit for farmers within subsequent trade deals.
Well, the ethanol was a unique part I saw. The thing is, we do export a decent amount of ethanol. Most of it goes to Canada. Right now, that's been under pressure. but total corn exports in the U.S. is around 15% of production. It's not a lot, but total corn exports of corn and soybeans and wheat are closer to 45 to 50%. So those are the key ones that are going to matter. And right now, on a scale 1 to 10, yeah, that'll help, but the 10 is the weather, and right now it's still looking good.
All right, it's going to be 87 and sunny, by the way, in Mike's neighborhood today down in Miami. Just so you know. Just so you know.
All right.
Okay, we
It's
have
supposed to be
rain
nice this
and we've got,
weekend.
yeah, it's going to be nice here up here. All right, Mike, what's the commodity? What do people want to talk to you about most when you talk to the smart money? Not me, but you know, the smart people in commodities.
Yeah, well, it's gold. I don't know anybody who's not bullish. It's gold. I get a lot of the questions, which is quite good. Gold's the best performing, one of the best performing major assets this year. It was up 33%. Now it's up 27%. But the key thing is gold versus Bitcoin. I get a lot of questions about that. Bitcoin has been catching up, but it's the disparity between the two. I've been saying for years, it's kind of hard to hold gold anymore without some Bitcoin in that space, the new digital version. But gold is risk off, very low volatility. Bitcoin's risk on, very high volatility. And it's bounced with the stock market. But the key question is, can it keep bouncing with this? It will, as long as the stock market goes up. So to me, the key theme for the rest of the year is what we mentioned earlier, John Tucker with stock market in the red zone and Gene Marta Adams being somewhat bearish the stock market. To me, the key theme is if that continues lower, gold will probably continue to be one of the best performing assets, most notably in commodities.
And my unsophisticated question about gold, being that I covered it for so long, is that when there's a huge risk-off event and a huge liquidity crunch, right, you kind of sell what you have to, not what you want to, and a lot of times that's gold. What if we don't get that? I mean, what is there to then stop this rally?
That's a key question, Alex. Now, we did have a little bit one in beginning of April when VIX popped to 60. Gold dropped a little bit, but that's when the stock market dropped to 5,000, the S&P 500. Bitcoin dropped around 75,000, and yields went up to, dropped around 4%, the 10-year notes. Now, everything has gone right back up, but I think that's the key thing. It depends on how hard you hit stops. If we go back to that bear market, which I think is the biggest risk this year, sure, you might hit gold first, but overall, that increases the trends, I think, towards ETFs going back in that space. And the key thing for everything is if the U.S. stock market goes down, it's the deflation from the inflation that we are getting in crude oil, and it means that would be the elephant in the room, which would be would definitely be good for gold in the longer term.
Mike, Tom from the Upper East Side writes in and says he needs an opinion on Bitcoin, 103,000. We're getting back to all-time highs.
Yeah, I have to admit, I'm not a fan at these levels. It's massive speculation. It's got a very high correlation to the stock market. Stock market was down about 5% in Q1. Bitcoin was down about 12%. You get the trend there? To me, Bitcoin will do fine as long as the stock market's up. And Bloomberg Intelligence and myself are more bearish in the stock market. So I think by the end of the year, Bitcoin will have a much harder time. And the key thing is it's way underperforming gold. The key thing I like to watch is that Bitcoin to gold ratio. It's the same right now. It's about 31. Ounces of Bitcoin, ounce of a gold to 1 Bitcoin. It's the same as 2021, which means, wow, that's it. It's all you can do. And you know that the rock is doing well even versus Bitcoin. So I'm worried. The key thing to remember about Bitcoin is it'll do well if the stock market goes up.
All right, Mike, really appreciate it. Mike McGlone and Bloomberg Intelligence Senior Commodity Strategist joining us on commodities. All right, let's get to the news of the day when it comes to politics, and that's the next 48 hours in Switzerland. And as we inch forward towards working on a U.S.-China trade deal, Nathan Dean is Bloomberg Intelligence Senior Policy Analyst. The news of the morning is that President Trump putting on Truth Social that 80% tariffs look right. What would an 80% tariff level look like between the U.S. and China? Is that a win?
What we would call it is an incremental win because it's getting us to a point of clarity. Now, obviously, an 80% tariff compared to a 154% tariff is much better, but it's certainly not at the level that you're going to begin to see any type of relief for the companies that we cover at Bloomberg Intelligence. You know, we often talk about, West Coast ports, slowing up and so forth. That trend will most likely continue with 80%. But I think the most important thing for the investors to think of when they come to their terminals on Monday morning is, do you see incremental wins to continue the negotiations? Is there a statement that says we're going to continue to negotiate, or is there a statement that just says we met and then, yeah, we'll discuss again sometime soon? So, obviously this is a continued negotiation. This is not going to get resolved in the next week, but we do want to see steps from the president and from Treasury Secretary Scott Bessent that conversation can continue.
What do folks on Capitol Hill think that might have some elections coming up in the next few years about What could be the economic fallout here from tariffs? Again, we had Gene Soroka, who runs the LA port, last week in our studio, and he was saying you could see some empty shelves in the coming weeks here. That can't be good politically.
No, and I think some of the Republicans that are supporting the president's tariff agenda, or at least privately, not combating it, may be just sticking their head in the sand and say, let's just hope that it's not as bad as it is. I will say is that, the Republicans on Capitol Hill really are supporting, Treasury Secretary Scott Bessent's 3 pillars: tariffs, tax reform, and deregulation. Now, when it comes to tariffs, Congress really doesn't have much to play in there, so they're just going to say, look, it's the president's problem. We support him. Let's see. But they're really putting all of their eggs in this basket of tax extensions. And so that's why there's so much pressure coming from Speaker Johnson at the moment to get a deal done, because the last thing the Republicans want is to go home for the 4th of July and go to these barbecues and say that they haven't done anything to make sure that these tax extensions continue.
Well, yeah. Also, will they be there? Because isn't there some sort of debt ceiling thing? Is there something they have to vote on that week or something also? So there is that. What do you make of the news that Bloomberg reported that we could see higher taxes on those that make over $2.5 million, whereas a couple over $5 million? Now, the way that the administration is going to want to sell it is that it's okay because they can afford it. We're happy to pay it, and we want to use that money to pay for other things. But then you also have the headline of Republicans raising taxes.
Yeah, so I don't think it's going to happen, because there's really 2 ways that you can deal with this tax extension debate. You can either raise taxes or you can cut what you're trying to do. And I think when it comes to the Republicans in particular, yes, President Trump says that, look, if you want to do it and you want to raise the $2.5 million for earners, I won't be opposed. But he also, in the same Truth Social post, said, well, read my lips, no new taxes type of thing. So I think what the Republicans on Capitol Hill are going to do is, rather than try and raise taxes, what they'll do is they'll scale down their ambitions. Now, there's been some reporting that instead of a $4.5 trillion tax hike, maybe they're going to go to a $4 trillion. There's already been some discussions about potentially, even saying, rather than making this permanent, we'll just do this for 4 to 6 years. And there's even been some discussions from the moderate Republicans saying, look, maybe we shouldn't even do this during reconciliation. Let's just wait till the end of the year, make a deal with the Democrats, just extend it and not cut anything. So, you're beginning to see little snippets of people saying, like, look, this is not as easy as everybody thought it was going to be. Well, I'm not sure anybody thought it was going to be easy. But now that they're facing the harsh realities, they're trying to find solutions, and those solutions aren't easy coming to them.
All right, Nathan, my strategy with all these tax discussions has been just to tune out. When do I have to tune in?
So I think that 4th of July deadline that that Secretary Bessent put in place is an important one. Next week, you're going to see a lot of headlines because we have 2 key markups. This is the House Ways and Means Committee and the House Energy and Commerce Committee. These are the committees that will say, here's our plan for all these tax cuts, and here's all of our plan for Medicaid cuts. And so, I just had a conversation with a client this morning is expect a lot of headline risk next week. But just remember, the House throws in the kitchen sink, and then the Senate ultimately scales it back. So Speaker Johnson wants the House done by Memorial Day. I think it's going to be more likely July. If the debt ceiling is included, then we think that this thing can pass before August recess. If the debt ceiling is stripped out, then look for this in October time-ish, before the end of the year.
All right, Nathan, really appreciate it. It's going to be a really fascinating 4 years. All right, Nathan Dean, Bloomberg Intelligence Senior Policy Analyst, joining us. I was trying to be like, what time frame should we put there? And I just think it's going to be interesting all across the board. Yep. Interesting also to see how calm the markets are. So that headline earlier that Trump says an 80% China tariff, quote, seems right ahead of talks. If that's the opening salvo, is that good enough for markets or not? It seems like a wait-and-see approach at the end of the day.
Yeah, S&P pretty much unchanged on the day. The Dow off 100 points. It's just 0.25%. The NASDAQ up. So red and green on the screen here. I think it feels like, they're going to go over to Switzerland, or the U.S. negotiating team. And if they can, I think a win might just be, hey, we're talking. We're working on this thing and ongoing discussions. That might be a win. I don't know.
You know what's not a win? Sweetgreen. Remember? We talked about that earlier, right? Cutting its annual guidance, citing a sharp decline in consumer sentiment following the announcement of new tariffs in the U.S.
Who has never set a foot in Sweetgreens?
John Tucker?
John Tucker.
Yeah.
Yeah, no, that reminds me, this weekend I got to plant the tomatoes and all that stuff.
See, there you go.
My veggies.
Yep.
I had to put them on the deck. Otherwise, the
animals,
deer will just
Of course.
devastate the garden.
Naturally. But apparently it's even making new restaurants more expensive. So then you can't open them, and then you can't get the traffic, and it's a combo there. All right, coming up, we're going to break down what's happening in the municipal bond market because it's Friday. Danielle Moran is Bloomberg Municipal Finance Team Leader, plus Mandeep Singh, Bloomberg Intelligence Senior Tech Industry Analyst on CrowdStrike. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. And we're being brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitment. Offer ends March 31st, and see if your company qualifies at oracle.com/Bloomberg. Major averages lower to unchanged right now. Wavering ahead of the weekend trade talks between the U.S. and China. It seems investors growing skeptical of any comprehensive sort of agreement. The leaders in terms of the index points for the S&P 500 right now, Insulet, best performing individual stock in the index. This is the insulin delivery system maker. They boosted their revenue guidance for the full year. You also have Microchip Technology. Those shares over 13% higher. The company reporting fourth quarter results. They said the period marks the bottom of the prolonged industry down cycle. S&P 500, 4 points lower right now, 56.58 on the index. The Dow Jones Industrial Average is down 121 points. The NASDAQ 100, 7 points lower. And I just want to bring this one to you. The FAA does confirm that radar screens at Newark Liberty International Airport briefly went black again overnight, 3:55 this morning. This is actually the Philadelphia TRACON Area C, which guides planes in and out of Newark. Newark is the hub for United Air Holdings, and those shares, they were down 2%. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash.
Now on Bloomberg Intelligence, Munis in Focus.
All right, today's Focus on Munis is brought to you by BAM Mutual. Put America's strength to work in your portfolio with BAM insured municipal bonds. Protect your investment with an added layer of security and guaranteed income. Invest with strength. Build a stronger tomorrow with BAM Mutual. There you go. Here's a story I really like. And our next guest is going to help us out here. Danielle Moran, municipal finance reporter for Bloomberg News, joining us here via Zoom. Vail, one of my favorite places to ski. Love the back bowls. They're going to go into the municipal bond market to build housing for employees. And folks, you probably all know this, hugely important. I don't care if you're Disney down in Florida or Vail out in the mountains in the middle of nowhere. The housing in these resort areas is so expensive that the folks who work there, in this case, kind of the folks who work the lifts and the restaurants and stuff, it's really a problem to find affordable housing, and this is what this bond's going to do. Danielle, talk to us about this bond issuance from our friends at Vail.
Definitely. So Vail, the city, and a nonprofit corporation that it created is borrowing to build housing, what they call workforce housing. So it's rental housing, which is in very low supply in resort areas, Vail specifically. And it's really geared towards people who work in Eagle County, which is where Vail is based. And it's for people who work at the ski mountain, who work at hotel receptionist desks, for people who support this industry, which is so vital to the Vail economy, but can't really afford the real estate to either purchase or rent in these areas. So they're bonding, they're building 3 rental residential towers. It should have over 200 units, which should expect to really help this situation.
Yeah, this is, I'm looking at a rendering in your story of the West Middle Creek housing project. It looks really nice. It blends in well with the other housing there. Vail, I would think of Vail would be a pretty good credit out there. I mean, they're so big and they've got resorts everywhere in the U.S., it seems like, in North America.
Yeah, so the Vail, the town's debt is rated at an 8A-, which is pretty good. It's a solid credit. It has the Vail name, which investors know and they like because they recognize it. A lot of times in muni bonds, it's a lot of education. It doesn't have a lot of people might not know the town or the city that might be selling, but Vail is pretty universal. So that gives it a lot of name recognition and credit support. A separate part of the bonds are actually being unrated though. So instead of being backed by the town itself, it's backed by the revenues generated by the project. So that is a little riskier than just getting debt from the town of Vail. But because this project is so vital, investors seem to like that credit as well because they think it's much needed.
Switching gears for a second, there was a really nice Bloomberg opinion article out that talked about how President Trump cutting off federal disaster relief, state, local governments are going to face some serious financial problems. He compares it to Western North Carolina after Hurricane Helene. This is Mark Gonloff. Are you hearing things along those lines?
So in the muni market, it really depends on the underlying credit for when it comes to natural disasters. Historically, muni investors have kind of brushed off hurricanes or wildfires, because the expectation is that FEMA is always going to come in and help rebuild. And oftentimes that spurs some economic activity and growth in the area. So in the past, we haven't seen a major differential or financial impact because of natural disasters. I think the calculus of that is changing. You saw saw it with the LA wildfires in January, especially on the utility side. LA Department of Water and Power, they were downgraded. Their credit spreads had widened out on the muni bonds. The city of LA was downgraded because of the economic impact because of the fires. So investors are starting to take that and take the possibility that FEMA might not always be there as a safety net into consideration. And I think it's certainly more on their minds now than it might have been a year ago.
Danielle, we had, I know we've been talking to you a lot over the last couple of months about colleges and universities hitting the market, the municipal bond market, to maybe shore up their balance sheets in what could be a very tough federal funding environment. How have those bonds been doing?
Yeah, so we've seen an onslaught of college debt. So both in the taxable and the tax-exempt space, colleges from really small liberal arts schools to the major behemoth of the Ivy League have been coming to market in droves. And we saw some underperformance in April. So college and university bonds in the Bloomberg Education Index dropped about 0.9% in April, or 0.95% in April, excuse me, compared to a 0.18% loss for the broader market. And I think that's because investors are starting to be a bit more cautious, not necessarily because they believe that there's going to be a ton of downgrades or defaults, but there is a lot more headline risk now than there was. And so they're taking that into consideration. They're asking for maybe a bit more yield to hold those securities and evaluate the credit as these deals come to market. But supply is also a factor. If you have a ton of issuance, then investors might be a little fuller on their portfolios and require a lower price to purchase more.
Danielle, super appreciated. Thank you so much. Danielle Moran, a Bloomberg Municipal Finance team leader, joining us in the state of municipal bond market. Let's get to some of the earnings that came out over the last 12 hours in terms of technology. And one of them is a CrowdStrike. So the U.S. is now probing a role of CrowdStrike bosses in a Carahsoft deal. I don't really know what that means, so let's get to that. But it wasn't good for CrowdSource. Amandeep Singh, Bloomberg Intelligence Senior Tech Industry Analyst, joins us now. So what's the latest with this thing?
Well, so I think this goes back a couple of months. In fact, Carahsoft is a reseller of software. So they sell all kinds of software to government agencies. And in this case, the contract is like $32 million. That was the end customer is IRS, and it seems the product was never deployed. So even though it was accounted for in CrowdStrike earnings.
I think I remember this, yes.
So it's getting probed, but to my mind, you know, for a company like CrowdStrike with a $4 billion revenue run rate, you know, they have federal exposure, but it's like maybe mid to high single digits, so not a whole lot of government exposure, and it is more of a one-off. I can't imagine, you know, that being a problem with how they do the accounting. It is more about how they source the contract through this reseller, Carahsoft, and when did it show up in the income statement as revenue. So nothing, to my best of my knowledge, is accounting related. It's more about the sourcing. And we have seen that with other companies like ServiceNow in the past, where, you know, you have government agencies that award contracts, and these are lumpy. Like, think of them as 12 months in the making, and then suddenly you get awarded a big contract. But nothing really that affects overall companies' sort of sourcing of contracts, I think.
Got some competition in the card hailing business. Look at Lyft, up 21%
It's like,
today.
forget CrowdStrike. Let's talk
Forget
about
about CrowdStrike.
Yeah.
I mean, again, Lyft, I bet you over the last 10 rides I've done, I've probably taken Lyft 7 times because they just had the better pricing and materially better pricing.
Yeah.
So somebody's algorithm's not working, either Ubers or Lyft's, but I'm taking advantage. I'm arbitraging that bad boy.
Yeah.
What'd you learn from Lyft?
Well, that pricing is the thing to focus on.
Yeah,
if you have lower prices, that helps you get repeat customers. And I think that what you just said absolutely makes sense. And look, when you compare Lyft to, let's say, DoorDash or Uber, Lyft has got about 24 million monthly active users. DoorDash has 42 million, and Uber's is much higher because they have geographic diversification. But when I compare the overall rides, Lyft does less than 1 billion rides in a year. DoorDash does 3 billion orders with 42 million users. So that just goes to show there is a lot of room for Lyft to increase frequency, and people are price sensitive. So that's where
Is that the only thing that people that you can different? Am I like the person? Again, me, it's just price because I know it is in most cases the same car, the same driver.
Yeah, and they have tiered, the customers. So if you want to go for a higher end service, they have vehicles available. So from that perspective, there is not much differentiation between an Uber and a Lyft.
See, I think I'm gaming the system here. Very
Totally,
efficient.
and
Very
you told
efficient.
everyone now, so now you're driving prices for everything. But what did Lyft do to manage their costs to help their margins, is considering that their market share, say, didn't grow?
I mean, look, in all fairness, the valuation was less than 1-time sales. So you compare it to other marketplaces, DoorDash trades at 5 times EV to sales, Uber is more 4x EV to sales. So Lyft, a lot of the bad news was priced in that this company is losing share, they would never really be profitable, and they just managed to execute much better operationally. They've been cutting costs on the operation side, sales and marketing side, and they have limited their ambitions to those 25 million monthly active users. They're not going after 100 million what Uber has. They're saying, if I keep getting repeat business from these 25 million, that will help me sustain mid to high teens growth. I don't have to go for user acquisition right now. And look, they are making an acquisition in Europe now, free now, so they are looking to expand geographically. But it's really finding your sweet spot and niches where Uber is not that big. And that strategy is good enough because at the end of the day, it's still a duopoly in ride sharing.
You know, I recognized when I was down at Duke a few weeks ago, when I was a student there, parking was impossible. Impossible. Now it's not a problem because not as many kids bring their cars because they just rely on Uber.
Yeah, makes
so
sense.
it's like
you don't have to worry about
So it's
driving
like
drunk or anything.
they were telling me it's not an issue anymore. So how about that? All right, Mandeep Singh, thank you so much. Appreciate that. Senior tech analyst for Bloomberg Intelligence, coming into the New York studio on a Friday, unlike his management team. So we appreciate that, Mandeep. You're a star. That's why you're a leader. We got the S&P 500 off 1 point. The Dow off 89 points. That's 0.2%. And NASDAQ unchanged. So as Alex was saying earlier, there's just not a lot going on out there in the marketplace. Everybody's taking a little bit of a breather here. We're going to have more economic data next week, so we'll keep an eye on that. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Stocks have undone some of the earlier gains, possibly in response to some of the headlines that are going around social media. They cite the Chinese Minister of Commerce. I'm not going to do them because I don't know if they're correct. I'll just say that there's some fading hope related to the weekend trade talks between the U.S. and China. Meantime, Joe Quinlan at Bank of America says trade talks definitely are in the driver's seat for investors.
The big event is this weekend in Switzerland. I mean, where we go from here, I think, is going to be dictated what between the United States and China. Can he at least, it's nice that they agreed to talk, but I think any kind of energy behind this rally is going to revolve around bilaterally those two countries.
Right now, the S&P 500 is turned lower, down 4 points, 56.59 on the index. The Dow Jones Industrial Average 100 points lower, 41,271, and the Nasdaq 100 right now is 18 points lower. That is down about 0.1%. The more policy reactive 2-year yield, that's down a basis point, 386. The 10-year is down just about 2 basis points. That is at 436. And then some of the earnings, they continue. Sweetgreen, this is the salad restaurant chain that I've never been into, cutting its annual guidance, citing sharp decline in consumer sentiment that follows the tariffs. The company expects sales at established locations to be flat this year. Microchip Technology shares, they are trading higher right now. The company reported fourth quarter results. They said the period marks the bottom of the prolonged industry down cycle. Microchip shares are up 11.5%. Sweetgreen, by the way, that is down just about 18%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. Yeah, that is your Bloomberg Business Flash. Alex and Paul.
All right, John Tucker, thank you so much. We appreciate that. AI. Boy, you remember when the time was we talked about AI nonstop, and then we switched the narrative to the tariffs. I kind of want to go back to AI. That seems like a lot more fun. But it's affecting all industries. We know that, including financial services industry. One of our next guests is really involved in that. Josh Pantany, CEO and co-founder of Boosted.ai, joins us here in our Bloomberg Interactive Broker studio, based in Chicago. In Toronto for our Canadian friends. Welcome, Josh. Appreciate it. Talk to us about Boosted.ai. What do you guys do?
So we make it easy for professional investment managers to build these little sort of AI workers that kind of automate different parts of the process. So you might give it some task related to maybe doing a competitive analysis or tracking what's happening with tariffs, and then have the worker kind of automatically scan through the world and inform you about really important information that could have impacts on your process.
So what's the ROI for something like that? Like if I'm a portfolio manager, what does it look like? What has my job get better or worse?
Yeah, well, it makes your job much better.
I would think that's the selling point.
We kind of think of it in 3 different ways. We can help automate drudgery. So if you're someone who has to do something like write a deep due diligence document, or if you do an ESG report or a SWOT analysis, or write like a 90-page investment thesis, these are all examples of tasks our system can help you do just a lot faster. The second way we think about it is sort of monitoring the world. If you have a portfolio and you wanted to sort of scan through everything happening in a particular sector, maybe look for every like 8K, 10K, scan through corporate events, the system can inform you real time. And then the last category I think of is sort of like superpowers. A good example of that is when NVIDIA had their Blackwell chip delay, you'd historically analyze that by looking at sell-side research, talking to IR groups. You'd still do that, but you could use our system to look through like 3,000 companies' earnings calls, summarize across all of them what are the major macro effects of this and how many are still bullish on working with NVIDIA versus other providers. And that kind of analysis just wasn't really possible at scale until our technology came around.
As a former sell-side research analyst, would my job be at risk here? Do people still need me?
Yeah, I think the job's just going to change.
Okay.
I think there's kind of 2 elements of that work, right? There's the element of producing text, analyzing text, producing numerical analysis. We think AI is going to more or less automate 90 to 95% of that. But there's another deep part of your job where you were going out and actually talking to humans. You were going to conferences, you were talking to management, you were talking to experts. Humans are always going to have a massive competitive advantage. And we think that the job almost gets more humanized. You spend more of your life talking to other people, getting information, learning what matters and keeping the pulse, while the machine keeps track of all the information in the world.
So one of the criticism is that, by going through all those earnings reports or whatever, sell-side reports, you learn stuff. And that if you have AI do it, you take away that learning tool. How do you combat that?
Yeah, absolutely. There's still going to be some earnings calls you're going to cover. But there's probably hundreds of earnings calls, maybe up the supply chain, down the supply chain, related to competitors, related to names that you don't cover, that have really big impacts on your stocks that you're probably not looking at today. By adding in something like this, the sort of set of information you can use as part of your analysis just increases a lot more.
Hey, what did you make of the news that's maybe came to a little bit of a head in this past week about AI as a threat to Google search?
Yeah.
What did you make of that?
So, number one, it absolutely is. But I think at the high level, there's kind of two interesting things with AI. Number one, we think we're still very early innings. There's a lot of room to expand. We don't think the market's priced that in. But number two, there is huge disruption that's coming. In particular, we think the cost of producing software is going to reduce like 99% over the next year or two. And so there's a lot of traditional companies that had very strong tech moats where those moats are going to basically evaporate overnight. And we don't think that's been priced in yet.
How are you looking to expand your business? How do you keep growing? I'm sure there's a lot of competition.
Yeah. Long story short, we're just under 1,000 users right now. There's a ton more out there, So we're growing really heavily quarter over quarter, but it's still maybe 1% of the market. And really my mission right now is to capture as much as I can over the next year or two.
So what's the feedback from, you go into a hedge fund or something, are they receptive to it? Do they feel like the quality may not be there? They're unsure about it? What's the reception?
Yeah, oftentimes when we engage, we like to start with sort of asking, what's the task you least like doing? Tell me about, you work 80 hours a week, 90 hours a week. What are the 10 hours that you just absolutely do not want to do? And really a lot of that journey is walking them through how to automate that 10 hours, that 20 hours, giving them that time back. And then we kind of build on top of that.
How hard is it to find a team? Like, I'm assuming that competition is huge right now. What's that like?
Like the technology team to actually build it?
Yeah.
Probably very hard. I'm really lucky. I've been in the space since about 2009. Built my first company, first AI company back in 2010 that eventually got sold to Microsoft. Worked
This is
at a few
before
other
any
places.
of us knew what AI was.
Yeah, no, back then it was a bad word. I had trouble raising money in 2009 because no one thought AI was going to be a real thing. Just crazy to think about.
What's like raising money today?
A little bit easier.
Yeah.
No, I mean, this company I've raised about $65 million in that range. Yeah. Jump back in time, Maluba, we raised maybe 13 million. So very different fundraising environment.
Do you go to different tools? So how do you keep refining your tools to broaden and make it even more useful? And also the accuracy level, how do you track that?
Yeah, so kind of two different questions there. I'll start with maybe taking track of technology. So we start by having a very deep empathy of understanding what are the kinds of workflows our users want us to automate? What are the kinds of things that actually matter? And then constantly tracking what does success look like for those kind of workflows, and where we have success with that. And I'm sorry, remind me the second question?
The second question was, it was really brilliant. Changing the tool, accuracy.
Oh, and accuracy, yes. This is actually really, really vital inside of finance. So the biggest problem is you're not going to make a $100 million trade if you don't absolutely trust the information that's coming out of the system. So we really think about that in two ways. Number one, we have to have the most accurate system in the space. Number two, we have to have the most auditable system in the space. When the system actually makes a recommendation to you, it's not enough to just give you an answer. It has to give you a very detailed explanation of where it came to that conclusion from, where it came from, and that's something we excel at.
Josh, thanks so much coming in the studio. Josh Pentany, he's the CEO and co-founder of Boosted AI, company based in Toronto, have an operation here in New York City, showing once again how we're very friendly, the U.S. and Canada. We love these guys.
I mean, yeah.
I know. So
I don't know if that feeling's going to stay, but sure.
No, it's all good. It's all good. We're all friends. Josh, thanks so much for joining us here. We're going to have more coming up. We're going to check in with Shaheen Contractor, talk about the state of ESG in investing. Things have certainly changed over the last several years as it relates to ESG investing. S&P 500 unchanged. The Dow off 72 points. It's about 0.1%, and the Nasdaq's also unchanged. So very quiet out there. In the yield space, the 10-year Treasury yielding 4.36%. WTI crude oil, we're right at $60 per barrel. Bitcoin, 103,000. This is Bloomberg. Good morning.
listening to Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, we got Alex Steele, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Head over to youtube.com and search Bloomberg Podcast Live, and that's where you'll find us. Let's talk a little ESG investing. Shaheen Contractor, Senior ESG Strategist for Bloomberg Intelligence, joins us live in our Bloomberg Interactive Broker Studio. Talk to us about this banking alliance as it relates to carbon goals. What is or was the alliance, and how is it changing?
Sure. So, Paul, the Net Zero Banking Alliance is a
Net Zero Banking
Alliance is an alliance of its members, which are the major banks. Now, what it's done recently, I think a couple of weeks back, is it dropped a requirement for banks to align their lending with a 1.5 degree. And what that means is a number of banks could actually delay or they could drop their carbon goals. We saw Wells Fargo do that before this was announced.
The agreement was, I won't lend to a company that's not committed to basically
in a way,
a positive climate change, or I'm going to limit.
In a way. So it was that the banks have to align their lending portfolio in whatever way it chooses to limit warming to 1.5 degrees. So it could be limit net zero goals. It could choose to do it in other ways, in whatever way.
But this doesn't affect banks' individual goals to get their company to net zero, right?
It could, because the banks could now abandon such goals. I think this could really give banks a leeway to do that. Wells Fargo, for example, was the first one to just abandon its climate goals. So it had a goal to become net zero for its investment portfolio, again, whatever way it chooses to do so, and it just abandoned that maybe last month.
But what about for their own individual operations? Like, here's my HVAC
operational
system that I'm upgrading to get to net zero.
So a bank's operational goals are really, I would almost call it insignificant. It's such a small share of its emissions that it's really what it lends to an investment that really matters and what people care about, to be honest.
All right, so just in your world of ESG, which you have a ton of experience in the U.S., where are we today? Where are we in terms of commitment?
Commitment. Well, as you know, a number of banks, a number of companies at large are rolling back on their commitments. So I think the most major would be diversity commitments, which we've spoken about before. There at least 20 to 30 companies we track have rolled back such commitments. I think in climate, Wells Fargo is really the first one. The other one is also actually RBC. So RBC last week abandoned its climate finance target. So it had a target to lend $500 billion to climate finance, sustainable finance, and it abandoned that.
Yeah. So, okay, when we say abandon, like what? Like that feels very dramatic.
It is dramatic.
It is dramatic.
It's almost like we will no longer meet this. We will no longer track or commit to this target.
So here's a philosophical question. Is it the bank's job to do that? Like shouldn't it be incumbent on the actual company to get to their net zero rather than relying on the bank to pressure them to do that?
So I guess in a way, so I'll leave that philosophical question open, but I would say if you're becoming the member of an alliance that requires you to do that, then and you're committing to do that and you backtrack from that, then that's a thing, right?
So I guess but it probably reflects, first of all, the U.S. market is different from the rest of the world.
Right.
ESG investing is still quite popular, from my understanding, in Europe. Is that still the case?
That still is the case. So if we look at ESG ETFs, which I track, about 700 billion were the assets as of last quarter, and I would say a majority, actually forget majority, 80-90% would be European.
Well, what's interesting though is that a lot of that used to be tech. Right? And I'm wondering, as we see the hyperscalers get really into data centers, et cetera, does that change their net profile?
It still is quite heavily weighted towards tech. What I would say, though, is in Europe, you have these naming guidelines which require funds to meet certain commitments. And because of that, funds are actually, a number of them are dropping their names, dropping the name ESG or sustainability from the name. So, for example, an ESG leaders index is now just being called a leaders index. Leaders of what? Go figure.
Okay, so where do you think this goes in the United States in just terms of?
I think we're going to see a number of companies continue to backtrack on these commitments and these goals. How it peters out or pans out will really depend on the political environment going forward.
Well, what are the other companies like Citigroup, Morgan Stanley, Bank of America, Goldman, JP Morgan? Where are they in their targets?
So our analysis of these banks' climate goals actually state that most of these companies are on track to meet their goals. So Wells Fargo, for example, was very much on track to meet their goals, and they still abandoned it.
Interesting. So I mean, I kind of feel like so goes JP Morgan, so goes the industry in terms of that. What's
JP Morgan still, so if you look at the sustainable finance commitment, JP Morgan's probably the highest. It has committed about 2.5 trillion to sustainable finance. It's still maintaining those targets.
All right, Shaheen, we'll keep on top of it because we know you are. Shaheen Contractor, Senior ESG Strategist for Bloomberg Intelligence, joining us live here in our Bloomberg Interactive Broker Studio. So I guess we focus on Switzerland this weekend?
Yes, I think we do. And also, what would constitute success? And it feels like just the fact that we're talking here would indicate some kind of success. I guess the question then becomes, what does the market think is successful or not? Have we priced in any sort of optimism? And you chase it here. Like, what's the incentive to chase it at this point?
Yeah, and it again, it comes down to the whims, effectively, of one individual. And again, I'm not really sure what motivates President Trump as it relates to these trade policy, other than his sense of fairness. So we'll see what kind of language we get coming out of that. So we'll see that.
All right. For our listeners, guys in the U.S., a reminder, you can listen to us via satellite radio, Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by ShipStation. Have a great weekend, guys. This is Bloomberg.
CBS News on the Hour, sponsored by Progressive Insurance.
I'm Steve Kathan. The FAA says there was an outage at the facility that runs traffic in and out of Newark Airport, darkening radar screens for 90 seconds just before 4 a.m. It's the second time it's happened in a couple of weeks. Transportation Secretary Sean Duffy tells CBS News fixing the problems at Newark's a top priority.
Listen, we're in a situation where, it's going to take us a little bit of time. I hope by the summer we're going to be fully functioning.
And in San Francisco, a computer glitch fouled the morning commute for people using the Bay Area Rapid Transit System. BART spokeswoman Alicia Trost.
We're making system-wide announcements saying that the East Bay stations have been authorized to fully open because we'll have limited train service.
We're hearing from some members of the College of Cardinals a day after their vote to pick the first American Pope, Leo the 14th. Cardinal Blaise Supich.
I felt comfortable saying to Pope Leo, from one South Sider of Chicago to another, I promise you my respect, my fidelity, and my love.
The Supreme Court says retired Justice David Souter died yesterday at 85. CBS's Jan Crawford reports Souter, who was backed by Republicans, turned out not to be conservative.
He became one of the most liberal justices, a predictable vote with the left on issues like abortion, religion, affirmative action, gay rights, on and on and on. Every issue that was important to conservatives, he sided with the liberals.
Now to Moscow, CBS's Elizabeth Palmer was there as Russia marked the 80th anniversary of the end of World War II with a huge military parade.
Very grand and lavish military parade to celebrate a great Russian victory 80 years ago in World War II when the Russian army defeated the Nazis and took Berlin. But on another level, it's political messaging. It's political theater. It sends a message to the world that Russia still is a great superpower, a nuclear-equipped superpower.
More trouble between the U.S. and Denmark over Greenland, as we hear from CBS's Elaine Cobb.
After newspaper reports suggested the U.S. had stepped up intelligence gathering in Greenland, Denmark's Prime Minister has said you cannot spy against an ally. It's the latest in a continuing spat over President Trump's announcement he would like to annex the mineral-rich Arctic island. Both Denmark and Greenland have said it's not for sale and warned against using force.
And checking Wall Street, right now the Dow is down 49 points. The S&P is up 4 points. NASDAQ is trading higher, up 16. This is CBS News. Democrats have blasted President Trump's firing of the Librarian of Congress. Carla Hayden was the first woman and first black American to hold the job. The New York Times reports the administration plans to resettle the first group of white South Africans in the U.S. next week. Trump has called them victims of discrimination. A big night for country music fans last night. Lainey Wilson won Entertainer of the Year at the Academy of Country Music Awards. She also won Top Female Artist and Album of the Year. Ella Langley's duet with Riley Green was named Best Single and Music Event of the Year.
Excuse me, you look like you love me.
Male Artist of the Year went to Chris Stapleton. Duo of the Year, Brooks and Dunn. Alan Jackson won the first Lifetime Achievement Award. Steve Kathan, CBS News.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
President Trump says an 80% tariff on China seems right on the eve of trade talks beginning in Switzerland. Welcome to Balance of Power. I'm Kaylee Lyons in Washington. Joe Matthew is off today, as the president says he's leaving things up to Scott B. That would be the Treasury Secretary, Scott Bessent, who alongside the U.S. Trade Representative Jamieson Greer will be meeting with China to begin trade negotiations tomorrow. We're going to get the latest with Bloomberg's Tyler Kendall, who's live at the White House for us. Plus, we'll get the latest on tax policy debates, as well as the president is also weighing in today on the idea of a higher tax rate for millionaires. Bloomberg's Eric Wasson and Wendy Benjaminson will be joining us on that story. Plus, Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are here as well, because it is Friday after all, and they're here every Friday, TGIF. And let's check on that Friday trade now as we get things rolling here with Amy Morris, who's in Washington. Hey, Amy.
Hey there, Kaylee. Wall Street may be ending the week on a cautious note. The U.S. and China preparing to start those trade negotiations. Alexander Altman at Barclays says investors shouldn't really hang their hats on any trade deal this weekend.
We're not going to get anything substantive over the weekend. And I would dare I say, Treasury Secretary Bessent has already kind of outlined that. And I think people often lose sight of the bigger picture. They're so focused on the minutiae. And actually, if you listen to what has been said by the administration, they said don't expect necessarily anything dramatic this weekend.
Alexander Altman at Barclays. We do check markets for you all day long at Bloomberg. We've got red across the screen, but it's just a smidge of red. S&P 500 down 2 points. NASDAQ down 14 points, and the Dow is down 90 points. The 10-year Treasury yield at 4.36%, and the 2-year yield at 3.86%. And Richmond Fed President Tom Barkin says it is not a given that companies will be able to raise their prices to offset the cost of tariffs. He warns that consumers' tolerance after years of inflation is only so high. He says the economy is in a good place, but he's also warning that tariffs could put upward pressure on inflation. He was speaking at the Loudoun Chamber's Policymaker Series. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Amy Morris. That is a Bloomberg Business Flash. Let's go back now to Balance of Power with Kaylee Lyons.
All right, Amy Morris, thank you very much. And as we are together on this Friday, we're looking ahead to the events of this weekend, where at long last, after weeks of post-Liberation Day jockeying and questioning back and forth between the U.S. and China as to whether or not they really were or were not talking about a trade deal yet, the talks are set to finally begin. They will happen, of course, in Switzerland, where the U.S. Treasury Secretary Scott Bessent has already made tracks alongside the U.S. TR Jamieson Greer. They'll be meeting with China's He Feng to get this conversation started, with the potential, of course, at least in the market's most optimistic scenario, to see the current incredibly high tariff rates lowered that these two countries have on each other, which administration officials have said is effectively a trade embargo. It's, of course, a 145% levy that the U.S. has put on all Chinese imports, 125% on imports of U.S. goods on the China side. The question is, if they are to be lowered, how fast will they be, and how low will they be? As President Trump takes to Truth Social today with two messages. First, in all caps, writing, China should open up its market to the USA. It would be so good for them. Closed markets don't work anymore. Followed up quickly by another post. 80% tariff on China seems right. Up to Scott B. That would be the Treasury Secretary he's referring to. I'm not sure what role he thinks Jamieson G plays in all of this, but we want to get the latest from the White House, where Bloomberg's Tyler Kendall is joining us live here on Balance of Power. So, Tyler, obviously these are going to be high-stake talks. Is President Trump really saying Scott Bessent is the one in charge?
Yeah, hey, Kelly, high-stakes talks completely, and it does appear that Scott Bessent is taking the lead here. Of course, he has long been at the forefront of this administration's efforts when it comes to quelling investors and consumers' concerns alike when it comes to any issues around their trade policies. Now, Scott B, as President Trump called him, is touching down in Geneva alongside the USTR Jamieson Greer. Someone who's actually not there, but still, of course, part of this trade team is Peter Navarro, and he had the chance to speak with Bloomberg Television earlier today, where he actually outlined one of the ways he thinks China might have an advantage in these talks.
They have continuity. The same people are going to be in Geneva were the same people back then, and our regimes change. We have different governments and things like that, but they have the advantage of that kind of continuity. But look, it'll be interesting. Again, I don't want to get ahead of Scott and Jameson or the president.
Well, something that the president has said and that you alluded to before is that he would be willing to lower tariffs on Chinese imports because the current situation amounts to essentially a trade embargo. But by floating the 80% levy, it probably goes without saying that that is still a very prohibitive number. I was catching up with one of our economists at Bloomberg Economics earlier today who said their forecasts still predict that this would basically shut off trade between the U.S. and China. Now, Bloomberg News did report earlier this morning a different number that could be in that target range, which is that if talks go well, U.S. officials feel that China may be willing to match a below 60% tariff and actually put into place as soon as next week. Now, of course, people familiar do caution us that everything is still up in the air. It's very uncertain. That is not confirmed. And this White House has said that any target tariff rates ranges is just speculation at this point. But it would appear that perhaps they could be looking at bringing those rates down to where they were on so-called Liberation Day, when China got slapped with that 34% reciprocal tariff stacked on top of that 20% tariff that was in place because of fentanyl concerns. Now, very quickly, Kaylee, we know that this White House wants to see China take some steps to de-escalate first, and that could look like a range of things. We're watching for potential concessions here that could include China boosting U.S. imports, tightening controls when it comes to fentanyl flows, or even importantly, maybe limiting some of their curbs on critical and rare earth minerals. Our reporting indicates that's something that this White House would really like to see.
Well, and I would have to imagine, Tyler, for China as well in these conversations, they're going to be pushing the U.S. not to push other countries against China, right? Because we've had reporting that suggests part of what the U.S. wants from other trading partners is more resistance to Beijing and what they see as overcapacity of its supply.
Right, and we saw that in some of the export data released today by Beijing. And I actually was particularly struck when the Commerce Secretary, Howard Lutnick, told you yesterday that one of the sticking points that they're seeing with the European Union actually does have to do with their trade relationship with China. Now, you asked President Trump, and he says that's not the goal here to perhaps counter China as a group, that China's its own special negotiation. They're going to treat these negotiations with respect. And it's not about, maybe perhaps ganging up on China moving forward. But it is clear that this administration is trying to prioritize some of those countries that are geographically close to China and perhaps could serve a role in countering them when it comes to the broader region. But interesting enough, just to add on that great interview from yesterday, Howard Lutnick did say that when it comes to some of those Asian economies that they have been prioritizing, particularly Japan, it's going to take a little bit more time because that's going to be very complicated negotiations ahead.
Yeah, and we're going to play some of our conversation with the Secretary in just a moment, Tyler. But before we let you go, keeping in mind that yesterday we did get that trade, maybe we could call it a deal, probably should call it a framework with the UK. Do we have a sense as to how quickly that process of finalizing and inking that deal will go from here?
Well, President Trump said that that will happen in the weeks ahead, but we should make clear they really are still negotiating out the details. And it's interesting as we sort of hear the debate on whether or not the UK deal is really going to be used as a framework, as a template, because we have to keep in mind the U.S. and the UK broadly had balanced trade going into this. So perhaps the bar is going to be a little bit higher for these other countries that are trying to ink the deal. Now, the U.S. and the UK did put out a framework today, a joint statement kind of cementing some of these details that we already knew, including, importantly, that the United Kingdom is going to get preferential treatment going forward when it comes to pending pharmaceutical tariffs. As you well know, the administration launched a Section 232 investigation back on April 1st, and we could get those additional sectoral tariffs in the next week or two.
A reminder that it's never really over with this tariff policy in this administration. Bloomberg's Tyler Kendall live at the White House for us. Thank you so much. And Tyler, of course, alluding to the interview that my colleague Saleha Mohsen and I had yesterday on the late edition of Balance of Power, where we got to speak to the Commerce Secretary Howard Lutnick about the trade deal with the UK, how China plays a role in other issues. This is part of our conversation.
With the UK, again, we had a balanced budget. It was really about our exports. We are not focused in sort of this, singling out China, any of that stuff. That's just not the president's goal. The president's goal is to drive the American economy. Hopefully, the meetings this weekend will de-escalate things and put things back on the right track with China and the U.S. on trade. But our objective with all these countries is whatever rate we set for China should be for the countries that trade with China and send it into us. That should be about the same for those two. That makes some sense. And otherwise, let's grow our exports and let's grow our tariff revenues. Let's grow our exports and let's take this trade deficit down. Remember, if you have a $1.2 trillion trade deficit and you cut it to $900 billion, you only cut it 25%, you grow our GDP 1%. Imagine the guy sitting in the building behind me grows our economy 1%, and then you bring in all these building, right? The trillions and trillions of investment, that's probably going to bring 2 points of GDP. No one ever thinks about the fact that the U.S. our economy grows similar to everybody else. And you know why? Because we export 4 points a year of GDP growth to the rest of the world. When Donald Trump brings that home, you're going to see our economy grow like fire. And that's what he's talking about, and that's what he talked about today.
Well, Mr. Secretary, in your last answer, you referred to a few other trading partners, the European Union, Vietnam. You also called out, is that where we should look to see the next deal emerge, or are we likely to see other partners like Japan and India first?
Well, I think we would like to do one in Asia so we can show that kind of arrangement. We want to do one in Latin America. We're trying to show people a framework of how to do business so that we can roll much more quickly, right? So once you do one trade in Latin America, you do one in the Caribbean, you can then say, look, here's a template. Why don't you all think about it and see, does that work for you? And if you want to modify it, modify it. But then what will happen is we'll do one and then we'll do 10, and then we'll do one and then we'll do 15. Right? And we want to do big, but obviously when you talk about Japan, I mean, come on, you've got to spend an enormous amount of time with Japan, Korea. These are not going to be fast deals. Now, India's been leaning in really hard, right? You know, I love doing a deal with India. That's certainly a possibility, but this is a lot of work. These are a lot of lines.
And a lot more, clearly, is still ahead, according to the Commerce Secretary, Howard Lutnick. You can find our full conversation with him on the Bloomberg terminal or online. And you can also expect to find more ahead here on Balance of Power as you listen in or watch us on YouTube on this Friday, because while we've talked about tariff policy so far, we have to turn to tax policy next. There's going to be some key markups on Capitol Hill next week in the Ways and Means Committee, especially Energy and Commerce Committee, as well as they try to figure out this tax and spending package and whether or not a Republican-controlled Congress and White House is actually seriously considering raising taxes on some individuals, granted millionaires at that. But we're going to get into the details next with Bloomberg's Eric Wasson and Wendy Benjaminson. They'll join me straight ahead, live from here in Washington, right here on Bloomberg.
It's 12:21 on Wall Street. I'm Amy Morris. Prosecutors and regulators are investigating a $32 million deal between CrowdStrike and Carasoft Technology to supply cybersecurity software to the Internal Revenue Service. Investigators with the Justice Department and the Securities and Exchange Commission want to know what senior company executives knew about that deal. CrowdStrike shares now more than 4% lower. Wall Street ends the week on a cautious note as the U.S. and China prepare to start trade negotiations, with the S&P wiping out gains and bonds edging higher. We do check markets for you all day long here at Bloomberg. The S&P is now about 4 points lower. NASDAQ down 24 points and the Dow down 105 points. The 10-year Treasury yield at 4.36%. The 2-year yield at 3.86%. Pinterest shares are more than 5% higher after its second quarter revenue guidance topped estimates. The company's efforts to use artificial intelligence to boost growth seem to be paying off. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That is a Bloomberg Business Flash. We return now to Balance of Power with Kaylee Lyons.
All right, Amy Morris, thank you so much, and a very happy Friday to you. Happy Friday to everyone. We are on the cusp of the weekend here, although for many in Congress, the weekend has already started. They've already left Washington doing so, with some major questions still remaining on Republicans' budget reconciliation package that they're trying to pass, in the House at least, before Memorial Day. A number of outstanding issues still, even as we look ahead to two key markups that are scheduled for Tuesday. In the Energy and Commerce Committee, which has to make decisions about Medicaid cuts, and in the Ways and Means Committee, which is charged with crafting the entirety of the tax portion of this package. That means making a decision on what happens with the SALT cap, whether or not the president gets things like no tax on tips or overtime or Social Security, and maybe whether or not to raise taxes on the wealthy. After Bloomberg's Eric Wasson had a scoop yesterday that the president himself actually talked to the Speaker of the House about raising the rate on those making $2.5 million or more for a single person, $5 million for a couple, to 39.6%. I asked the Commerce Secretary, Howard Lutnick, about that proposal last night on Balance of Power. This is what he told me.
The president's trying to make sure he gets no tax on tips, no tax on overtime, and no tax on Social Security. And if he says, look, the richest Americans, remember, he cut it from 39.6 to 37. So if he just goes back to what he did last time, you know, I'm in favor of that. I think it's smart, as long as it's a redistribution to his priorities of no tax on tips, no tax on overtime, and no tax on Social Security. I think it's smart.
So Lutnick is in favor, but is the president himself actually in favor of this, or just willing to tolerate it? Because this is what he said on True Social earlier today, quote, "The problem with even a tiny tax increase for the rich, which I and all others would graciously accept in order to help the lower and middle income workers, is that the radical left Democratic lunatics would go around screaming, 'Read my lips,' the fabled quote by George Bush the elder that is said to have cost him the election. No, Ross Perot cost him the election. In any event, Republicans should probably not do it, but I'm okay if they do." So will they? It's on that note we turn to Bloomberg's Eric Wasson, as well as Wendy Benjaminson, who's here with me in our Washington, D.C. studio. We find Eric on Capitol Hill, where he spends a lot of his time these days covering Congress for us. And Eric, given that this was your reporting initially that I'm referencing here, this 39.6% tax rate for a party that, by and large, is in it to cut taxes, not raise taxes on anyone. Is this actually something that could happen in this House of Representatives?
No, I really don't think so. It would take an enormous push from President Trump if he had come out on Truth Social and really doubled down on what he said privately to the Speaker and pushed them to do it. Trump can move mountains in this party. He's taken over the party for all intents and purposes. But his ambivalent Truth Social post really makes me think this thing is dead. We saw Mike Crapo, who's the top tax writer in the Senate, go on the Hugh Hewitt show and pan this idea. We know most Republicans in leadership positions are against it. I just don't see it happening. That being said, I think the president does have good political instincts. It would play well. The biggest attacks from Democrats will be this is a billionaire tax cut funded by cutting Medicaid for the poorest. And that's going to sting them in the midterm elections, I predict. But I don't think the president's going to be able to get that rate increase.
And I want to talk about the political calculations here with Wendy as well. But first, Eric, on this suggestion, and Howard Lutnick was kind of speaking to this, that they would consider this because they need to find the money somewhere to fund all of these other tax cuts. If it's not going to be raising taxes on the wealthy, and it's also potentially not going to be cutting Medicaid as much as is prescribed in the budget for the Energy and Commerce Committee, where do you come up with that? Or does that just mean you can't cut all the taxes the president wants?
Yeah, it's a tale of two cities, tale of two chambers. The House is where the issue of spending cuts is really salient. You've got a group of conservatives who just really want to see at least $2 trillion, or in some cases $1.5 trillion, in exchange for $4 trillion in tax cuts. The Senate has given itself permission in its budget to essentially barely cut spending at all, just $4 billion, and basically use a budget gimmick to say that this is extending the existing tax cuts costs $0 because it's current policy. At the end of the day, a lot of people up here think that the Senate will get its way. There's not the appetite in the Senate for this type of spending cuts, and the deficit hawks, to the extent they are deficit hawks, will just swallow it in the House. I'm not sure that's the case. It's going to be a protracted fight. But the real problem right now in the House is they can't get the House moderates to sign on to these deep Medicaid cuts, and they're going to have to lower their tax appetite. I'm looking at perhaps maybe 3 or 4 years only of this no tax on tips and no tax on overtime. They just can't afford a 10-year package, and maybe everything else gets scaled back to just 4 years, and say you'd have to reelect Republicans in 2028 to get it extended.
Well, and it is the question of whether or not the Republicans can get reelected that's at play here. Wendy, to the point Eric was making, Democrats' argument has made they're only trying to cut taxes for the rich. They're going to cut Medicaid. They don't care about lower and middle income people. But if, for whatever reason, even if Eric is a little bit skeptical about this, we end up with a higher tax bracket for those who are millionaires, and we don't end up with as steep Medicaid cuts. That really makes complicated the messaging of the other side.
It does, and Democrats will have their own problems finding the messaging, but there's a lot of chess moving at play here. The tariffs that Donald Trump has been championing hurt his base. It will raise consumer prices for goods made in China, Mexico, things like that. It will raise the cost of American cars. And so he knows, he does have good political instincts, and he knows that that has hurt his base voters. So he answers that with, well, but look how populist I am. I'm going to raise taxes on millionaires, which he says he would graciously accept to pay. And we saw evidence in the first term that he doesn't pay the taxes he owes anyway. So, who knows if he'll actually pay it. But then he realizes that this may not raise enough money, that it puts Republicans in a bind who are in districts with high-income earners, and therefore now he's got to sort of back off of it and say, I don't really want to do it, but if you want to, I'm okay. And that gives him the cover to not be responsible. It will be, look at those crazy House Republicans. They raise taxes on the rich just so I could cut taxes elsewhere.
Well, but I feel like we've had this conversation a few times, whether it's the election of a speaker or other matters in the House, that ultimately the president, or one bill or two. We've obviously now settled on one big, beautiful bill, but for a while, President Trump was leaving things open on that front, too. Have we not learned he has to make a decision and enforce it among the ranks of Republicans on Capitol Hill for anything to actually get done?
Yes. I mean, the way, as Eric says, the way he has remade the party, he has made it so that he makes every single decision that is coming forward and doesn't leave it to, the House Speaker or the Senate Majority Leader to be able to whip their voters into a bill that they know will pass and will protect them politically. They are only interested in what Donald Trump thinks, and that leaves them in a real bind.
Mm-hmm. Well, you're especially in a bind, Eric, if you're in one of these blue state districts, or maybe a member of the so-called SALT caucus. As we know, the SALT cap is very much still up for debate. The speaker has floated raising it to $30,000 from the current 10, and at least one SALT district member, Nicole Malliotakis of New York, is suggesting that's a number that she's okay with. My question is that going to be enough to satisfy everybody else?
It's really not. Malliotakis was kind of the weakest link in the SALT caucus block. We saw the 5 other members, including from New York State, including Mike Lawler, Andrew Garbarino, Nick LaLota, being much firmer. And then they were joined by Elise Stefanik. Very interesting move by her. She had not been a player on the SALT issue. There's talk of her running for governor of New York, and she suddenly got in on these meetings where she had been absent before, and then she was part of a statement rejecting the 30,000 yesterday. Young Kim, and a very vulnerable Republican in California, also rejected the offer. We haven't heard from Tom Kaine, who's a bit of a silent figure up here on Capitol Hill of New Jersey, but he's a very salt-heavy district in the western part of the state. I suspect he's against it, but keeping his cards closer to his chest. So, this is going to continue to be negotiated. One thing we might see, this was a flat 30,000. We might see them double it for couples. There's been a lot of, I talk about the marriage penalty under SALT, but, Young Kim had come out and said she wants 62,000 for an individual. I think she has a much more wealthy district. So we'll see. They can afford to maybe lose one, but they already know there's certain people like Thomas Massey who are going to vote no on any tax bill, and they can only afford to lose 2 or 3. So it's going to come down to the wire on the House floor.
Well, and when we consider these members in particular, Wendy, I wonder how much leverage they have, knowing that if they decide not to vote for a tax package at all and the 2017 cuts are allowed to expire, there is no cap on SALT. That could arguably work better for them at home.
It absolutely could. It would also increase the ire of Donald Trump. So going back to my earlier point, which is they're going to have to pass something, and they will have to figure it out. But what every decision will make is how much political pain can they endure to deliver to Trump, what he wants. And if they do cut Medicaid or narrow it down, that is going to cause tremendous pain in the red states that Trump wants. The SALT also hits all those members that Eric listed. New York and California Republicans may be thrown out in the midterms, leading to Democratic members, which could flip the majority and stall his agenda. So there's so many layers to every decision that they're going to make here.
Well, and decisions do still have to be made. Eric, just in our final minute here, what's the likelihood that these markups currently scheduled for Tuesday get punted again?
I don't think they'll be punted, but I think, we may see a product come out that's less than satisfactory to every committee member and some last minute changes. I'm anticipating, for example, Ways and Means is going to meet at 2 p.m. on Tuesday. They may go all night onto World, completely exhausted, and then spring some compromise deal that we can barely understand, super complex, full of all kinds of loopholes on us, and we'll have to digest it. So I think it's going to be very messy. I also think the House could vote on it in May, and we could see it fail and then come back. There's going to be a lot of fits and starts in this because it's going to be very, very hard to get the near unanimity that they need to pass this package.
Can you sense the excitement in Eric Wasson's voice here to have to cover all of this? Eric Wasson, Bloomberg congressional reporter, thank you so much, alongside Bloomberg senior editor Wendy Benjaminson here in Washington. Very much appreciated as we look forward to the events of next week here in D.C. It's going to be a big one for trying to advance this massive legislative agenda and get it through Congress as Memorial Day is quickly approaching. And we still have much more ahead here on Balance of Power. Up next, Bloomberg Politics contributors Rick Davis and Jeannie Shanzana will join me. We'll turn to our political panel about the new nomination we got from President Trump last night for the district attorney in Washington. We'll have more ahead on Bloomberg.
It's 12:40 on Wall Street. I'm Amy Morris. Pinterest's second quarter revenue topped guidance, easing investor concerns about an advertising slowdown, and company CEO Bill Ready remains optimistic that Pinterest's AI investments are starting to pay off.
Pinterest is where Gen Z goes to shop. Gen Z is now our largest, fastest growing demographic, over 40% of our users. That has allowed us to deliver great performance for our advertisers.
Pinterest CEO Bill Ready speaking with Bloomberg Technology's Caroline Hyde. Wall Street may be ending the week on a cautious note. The U.S. and China getting ready for those trade negotiation talks. We check the markets for you all day long here at Bloomberg. The S&P 500 down 0.1%, NASDAQ down 0.1%. The Dow is down 0.4%. The 10-year Treasury yield at 4.37% and the 2-year yield at 3.87%. Joe Quinlan at Bank of America says those trade talks will be in the driver's seat for investors.
The big event is this weekend in Switzerland. I mean, where we go from here, I think, is going to be dictated what between the United States and China. Can they at least, it's nice that they agreed to talk, but I think any kind of energy behind this rally is going to revolve around bilaterally those two countries.
Joe Quinlan at Bank of America. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That is a Bloomberg Business Flash. We return now to Balance of Power with Kaylee Lines.
All right, Amy Morris, thank you so much. I'm Kaylee Lines in Washington, and indeed, you're listening to us on Bloomberg Radio or watching our Bloomberg feed on YouTube. Happy Friday to you all. And here at Bloomberg, of course, we don't consider ourselves to be in the business of necessarily discussing other media outlets, so please know what I'm about to say is not a comment around Fox News. It's simply purely an objective observation about how strong the Fox News to Trump administration pipeline continues to prove to be. Remember, two of President Trump's cabinet secretaries, the transportation secretary, Sean Duffy, and the defense secretary, Pete Hegseth, are former hosts on Fox News. There are dozens of others who are either in the president's orbit or in other roles in the administration who are formerly affiliated with Fox and Fox Business as well. And as of last night, we have another name to add to the list here. Judge Jeanine Pirro, who, of course, was a host up until yesterday, I guess, of the five on Fox, has officially been tapped to be the interim U.S. attorney for the District of Columbia after the president pulled the nomination of Ed Martin for the post once it became clear his climb to Senate confirmation was going to be much more uphill and steeper than previously thought. Martin's now going to get a role at the Department of Justice instead. Those official roles will be the next Director of Weaponization Working Group, Associate Deputy Attorney General, and Pardon Attorney. So we want to get reaction to these developments and others and turn to our political panel on this Friday. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are with me. Rick, of course, Republican strategist and Stone Court Capital partner. Jeannie, Democratic analyst and senior democracy fellow at the Center for the Study of the Presidency and Congress. Welcome to you both. Rick, would love you to weigh in here, not just on the idea that Ed Martin's nomination had to be pulled and what that might signal, but that his interim replacement is once again someone whose face we recognize from television and one network in particular.
Yeah, no, this is right out of the playbook by Donald Trump. He really likes his team at Fox and, as you point out, has been mining them for his administration. It's worth noting that a contributor like Jeannie and I, Tulsi Gabbard from Fox, is also one of the more notorious members of the Trump administration. So shout out to contributors all over the place. But look, Judge Jeanine, yeah, she is a big sort of celebrity within Fox, but she had a career as a county judge and as a prosecutor in Westchester County, New York, which was extremely successful. I mean, she has got the credits, the capability, and the experience you need to serve in this post. So it's not just a Fox News analyst or participatory journalist. It's somebody who actually was a prosecutor and a judge and has a lot of experience here.
So, Jeannie, is she qualified?
I have to tell you, Kaylee, Janine Pirro was my Westchester County DA for many, many years.
The world is small.
It's a small world. Shout out to contributors and DAs everywhere. It's just fascinating because one of the reasons that Tom Tillis, who's really the linchpin of this entire move from Martin to Judge Janine, as we call her, was because of his role primarily in the January 6th incident and also obviously supporting the pardons of the January 6th rioters. And yet, if you listen carefully to Judge Janine, and it really doesn't take to be very careful, but if you just listen to Fox News, she has said a number of things that really leave you scratching your head if you're listening to Tom Tillis, because there's not a lot of difference between what Martin was saying and what Judge Janine has said about January 6th. In fact, she's named in these two big defamation lawsuits, the Dominion voting one, which obviously Fox News ended up settling. Some of that was about things that she had said on the air. So that to me is one of the fascinating areas here. And yet, despite that, Tom Tillis goes on Twitter and says, this is a great appointment on Judge Janine's part. So, it's interesting to see how this is playing out. She seems to be more politically palatable, despite the fact she's no more independent from Donald Trump in the White House. And her views are very similar to Martin's on the issue of January 6th.
Well, I'm glad she's raising Tom Tillis here, Rick, because one of the most memorable lines from you I think we've gotten here on Bloomberg this year was when you said everybody sometimes wants to be a John McCain and they end up a Tom Tillis, when he notably did not defy the Republican Party with a few of Trump's other nominees earlier this year for higher profile cabinet posts. What is it about Ed Martin that finally got a Republican senator to step out of line with the party?
Well, I'm pretty sure he was listening to me and not thinking about Ed Martin, right? I mean, look, Senator Tillis makes the case, and I think it is a differentiator to Judge Janine, that Ed was someone who actually participated in the protest, the march to the Capitol. Reports have it that he didn't enter the Capitol. But he was an activist in the effort, and then really didn't just comment about it on TV. He actively represented members and lobbied hard for their commutation. So I think you would have to consider him in a different subset than someone who just comments about it on TV. But look, I think all these folks in the Senate, especially as it relates to controversial nominations, are feeling their way. They're trying to think through, how far they can go. There was a rally around the cabinet initially, get them in place, do it early, do it historically early. But I think now you've got some folks who are, thinking, gee, maybe we shouldn't just be a rubber stamp and start feeling our way through some of these nominees who may not be qualified to serve.
Well, and when we consider other nominees, I would note, Jeannie, that it wasn't just Ed Martin's that was pulled this week. Trump also abandoned his original pick for Surgeon General in favor of Casey Means. And I wonder if you see that as a signal at this point, when he was able to get all of his at least highest profile cabinet level positions filled with record speed, as Rick was alluding to, and with relative ease, with the exception of Matt Gaetz. Does it even matter if he has to pull them at this point?
I think he feels that in the case of Means, he said, look, this was somebody who came highly recommended by Kennedy, who he trusts enormously. He said he doesn't know her well, but based on what he has heard and the recommendation, he was fine going with her. But I think it shows in both cases that the president feels he has other priorities that are taking precedent over a big fight in the Senate, if that's what it would be, about a confirmation that's on the edge. And this Martin's one was going to be on the edge when you look at some of what had come out about him hosting and praising on his podcast somebody who spoke, about Hitler, dressed up as Hitler, said horrible things, horribly anti-Semitic things. This was the kind of thing that was going to come out in the Senate confirmation hearing. And so Does the president really want to waste, political capital on that? Probably not. So you would fight for those upper level positions, but now he's starting to say he's got other priorities. Of course, number one being getting that reconciliation bill. So I think that's what we're starting to see here with some of these other appointments. That's not to say they're not important, but the president isn't willing to waste a lot of political capital on them.
And while we're discussing current nominees and nominations, I also want to talk about a nomination that was made decades ago that we're reflecting on today. And that was the nomination made by then President George H.W. Bush for David Souter to get a seat on the Supreme Court. He was thought at the time to be a conservative pick, and his tenure on the court maybe proved otherwise. Rick, he died this week at 85, peacefully, we understand, at his home in New Hampshire. And I wonder your thoughts as to how we should be reflecting on that legacy.
Yeah, this might have been the greatest surprise in the last 50 years as far as an appointment under the Supreme Court. I remember it very clearly as a young Reagan conservative thinking, wow, this is an incredible opportunity to put a conservative on the court. And of course, my great friend, late Senator Warren Rudman, picked this one out of his back pocket from New Hampshire and stunned the world. And when George H.W. Bush, President Reagan's vice president, appointed him, I think people were floored. And it was not a shock or a surprise that he wound up being as moderate a Supreme Court justice as he turned out to be. But really an amazing period of time then. We see a lot of the debates around things like Roe v. Wade happening then that happened in the first Trump administration. So it is a little bit of deja vu all over again. But may he rest in peace, a great servant of the people of our nation, and somebody who I think considered the law the highest calling in the land, and certainly served honorably.
Well, and Jeannie, as we consider his tenure on the court and his service for 19 years on the high court, are we ever going to see someone like that again, given how partisan and politically tinged the court seems to have become?
I don't think so. I think one of the things we see, and Souter is a good example of this, is future administrations learn from past administrations. And in this case, the H.W. Bush administration described Souter as the biggest mistake of his presidency. I don't know if that is something that everybody would agree with, but certainly, he was in a camp like Earl Warren. Earl Warren appointed and then becomes this, really, really the most liberal lion of the Supreme Court ever and Chief Justice. Souter, not quite as impactful, but certainly in the latter part of the 20th century, had a big voice on the court. And so I don't know that we'll see this. He's also something of a throwback in so many ways, Kaylee. Here was somebody who wrote decisions longhand on pen and paper, famously decried technology. Here was somebody, they said, every day took a lunch in a plastic bag of a yogurt and an apple to the office and ate by himself. And here's somebody who retired after, as you mentioned, just 19 years at the young age of 69 to go back home to New Hampshire and continue to serve the public there. And so in so many ways, also a traditional sort of New England-ish Republican that you don't see a lot of anymore. So in so many ways, a throwback to an earlier era. And it's sad for me personally, because I don't know that we're going to see that again, at least in the near future.
Have we seen, though, Rick, glimpses of it in Justice Amy Coney Barrett, who earlier this year was getting a lot of flack from the right for multiple times siding against the Trump administration when she wasn't expected to?
Yeah, I think certainly my experience is you never really know what you get with a Supreme Court appointment until they've started a ruling. And I would say not just Amy Coney Barrett, but Brett Kavanaugh, I think, has been a surprise to some conservatives who thought he would be a very conservative judge, and even Neil Gorsuch has surprised some with his ruling. So I think that this court currently is particularly interesting because they are not following just a very clear conservative line every time there's an issue in front of the docket.
All right, Rick Davis and Jeannie Shanzano, appreciate both of your reflections. Of course, they will both be back for more in the second hour of Balance of Power, which is straight ahead as we return to the big topics of conversation dominating Washington today. A lot of that, of course, tax and tariff related. Perhaps no surprise on tariffs, of course. Trump saying that 80% seems to be the right level on China on the eve of trade talks happening between the U.S. and China in Switzerland. And on taxes, we're looking at 39.6% potentially on the rate for millionaires, but a big question as to whether or not that will work its way through Congress successfully. So we'll have more on that in the next hours. We also continue on this Friday to reflect on the legacy of former Supreme Court Justice David Souter, who of course served on the court for 19 years, retired in 2009, and died peacefully last night at his home in New Hampshire at the age of 85.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
President Trump is leaving it up to Scott B. Welcome to Balance of Power on Bloomberg TV and radio. I'm Kaylee Lyons, live in Washington, as President Trump today says an 80% tariff rate on China seems right on the eve of trade talks beginning in Switzerland between the aforementioned Scott B., the Treasury Secretary Scott Bessent, U.S. Trade Representative Jamieson Greer, and China's He Lifeng beginning. We'll have more on what we can expect with Bloomberg's Tyler Kendall, who's live at the White House, plus get analysis and insight from Nazak Nakakhtar, formerly of the International Trade Administration. Hagar Shamali will be here, too, now with Greenwich Media Strategies ahead of President Trump's trip to the Middle East next week. And our political panel, Rick Davis and Jeannie Shanzano, will be here to weigh in on the budget reconciliation work still ongoing in Congress and questions about just how high taxes could go or how much they could be cut. It's all ahead this hour, but we begin, as always, with a check on the markets on this Friday trade, and Amy Morris is keeping track from here in Washington. Hey, Amy.
Hi, Kaylee, and you're absolutely right. The U.S. and China preparing to start those trade negotiations, and that sends Wall Street ending the week on a cautious note. Now, ahead of the talks, President Trump, as you mentioned, floated that 80% tariff on China while urging Beijing to open their markets to U.S. products. Trump saying that he's willing to lower the tariffs on China at some point, but is not going to preemptively lower taxes on China to help move those negotiations along. Investors now skeptical that the talks will result in a comprehensive agreement. They're also looking for signs of easing in the trade war, and that has moved the markets. We check those for you all day long here at Bloomberg. The S&P 500 down 0.25%. NASDAQ also down 0.25%. The Dow is down not quite 0.5%. The 10-year Treasury yield at 4.37% and the 2-year yield at 3.87%. Richmond Fed President Tom Barkin says it is not a given that companies would have to raise their prices to offset the cost of tariffs. He warns that consumers' tolerance after years of inflation is only so high. He says the economy is in a good place, warning that tariffs could put upward pressure on inflation. He spoke at the Loudon Chambers Policymaker Series. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That is a Bloomberg Business Flash. We return now to Balance of Power with Kaylee Lyons.
All right, Amy Morris here with me in Washington on Bloomberg TV and radio. Thank you so much. Of course, all of Washington and probably a lot of the country, even the world's eyes, will be not here but abroad this weekend, in Switzerland in particular, as trade talks between the U.S. and China are set to formally begin. Remember, the U.S. and China have had very different messages as to whether or not they've been talking for the last several weeks, really since Liberation Day, in an effort to ratchet down the effective trade embargo between these two countries as it has been described. But now it is finally happening. Treasury Secretary Scott Bessent, USTR Jamieson Greer with China's He Lifeng in Switzerland to see if they can lower the temperature. The question, of course, is how much could the temperature, and in this case, the rate of tariffs these two countries have placed on each other, be lowered to? President Trump taking to Truth Social today, suggesting, quote, an 80% tariff on China seems right. Up to Scott B. So a lot is in the hands of Scott B., the Treasury Secretary, of course. And we want to get the latest now from Bloomberg's Tyler Kendall, who is live at the White House. Tyler, do we have an understanding of whether or not we think Scott B. or Jamieson Greer, for that matter, are going to be able to walk away from Switzerland with something tangible in hand?
Well, at this point, Kaylee, Bloomberg Economics says that they are not expecting an immediate agreement or a permanent de-escalation, but perhaps we could see a lowering when it comes to tariffs, ideally on a reciprocal basis. Now, as you mentioned there, President Trump said that an 80% tariff seems right in his words, but he's leaving it up to the Treasury Secretary as he touches down in Geneva alongside the USTR Jamieson Greer. Now, somebody who's not there, but of course still a member of this trade team, is Peter Navarro, and he told Bloomberg Television earlier today one of the ways he thinks China might actually have an advantage going into the weekend.
They have continuity. The same people are going to be in Geneva were the same people back then. And you know, our regimes change. We have different governments and things like that. But they have the advantage of that kind of continuity. But look, it'll be interesting. Again, I don't want to get ahead of Scott and Jamieson or the president.
Well, President Trump has said numerous times that he would be open to lowering tariffs on Chinese imports, saying that the current situation basically amounts to a trade embargo. To be sure, an 80% levy is still a very prohibitive number. I spoke to one of our economists earlier today who said it would basically still keep trade off between the U.S. and China. Now, our reporting from earlier this morning was that if talks went well, U.S. officials felt that China may be willing to bring down their tariff rates on a reciprocal basis to below 60%, and that could even be implemented as soon as next week. Now, it does remain to be seen. People familiar do caution us that everything is in flux, but a new analysis out from Bloomberg Intelligence in just the last 30 minutes, Kaylee, says that those tariffs could come down as soon as May 12th and likely by May 20th. They analyzed a lot of shipping data and data from retailers that say that these next 2 weeks are going to be a critical period.
Well, and as we consider the next 2 weeks and beyond, what really could the U.S. ask of China that China is willing to give when we consider concessions here?
Well, there's a few things on the table that the U.S. might be interested in. One, of course, as you heard President Trump say earlier, that they want to see an increase in market access. Perhaps that could mean that China could commit to some bigger purchase agreements, perhaps resurrect some of those purchase agreements that we saw under the Phase 1 China deal, particularly when it comes to agricultural purchases into China. Another thing, of course, that we know is on the table is that the U.S. could ask them to tighten controls around fentanyl flows. Of course, that's how that 20% tariff against China originally went into place. And then lastly, but very importantly, and our reporting indicates that this is high on the priority list for this White House, is that they could be asking for China to loosen some of its export curbs when it comes to critical minerals and rare earth minerals. Of course, China is a huge exporter of these to the United States and has taken recent steps to really try to bring them back, dial them back in a bid to counter the U.S. amid what has been this escalating trade war.
All right, Bloomberg's Tyler Kendall live at the White House for us. Thank you so much. And Tyler, of course, brought us a taste of Bloomberg's interview earlier today with White House trade advisor Peter Navarro. We'll have more of that for you later on this hour. But first, we have our political panel to bring in. Bloomberg Politics contributors Rick Davis and Jeannie Sheehan Zaino are with me. Rick, Republican strategist and Stone Court Capital partner. Jeannie, a Democratic analyst and senior democracy fellow at the Center for the Study of the Presidency and Congress. Jeannie, when we consider the backdrop to these conversations happening between the U.S. and China tomorrow, knowing that polling suggests Americans are unhappy with the trajectory of tariff policy, they are worried about the economy. You're seeing it showing up in sentiment data as well. How badly does the Trump administration actually need progress to be made to lower the temperature with one of our largest trading partners?
You know, I think they do need to show that they are, as you said, lowering the temperature. I don't think we have yet seen, because we haven't seen empty shelves. We're just seeing the first sort of cost impacts. It's going to take a little time for consumers to really understand what it means for them at the store and when they go to buy goods. And that buys the administration a little bit of time. But of course, you know, China is the game for the administration. They really do need to show at least turning down the temperature this weekend, maybe getting a little bit of progress so they can make more going forward. And, you know, I couldn't agree more, and I seldom say this, Kaylee, with Peter Navarro on what he said in that interview, because it has always been to our detriment that we lack continuity, and more so the fact that unlike Xi Jinping, Donald Trump and the Republicans have to keep looking over their shoulder to push things through the Congress, and also with this looming deadline of a midterm election. Those two factors make it so much more difficult for the U.S. contingent to really push for what it wants versus their Chinese counterparts. So it is a really important point that Peter Navarro makes there.
Well, yeah, and I want to expand on this point further because, Rick, as Jeannie is alluding to, we're dealing with an environment here in the U.S., at least fiscally, in which we're talking about spending cuts, not adding stimulus, where China is saying, okay, there's things we could do to stimulate our economy, offset some of this pain. Is it actually China that is coming to these talks with the stronger hand, despite the characterizations of President Trump, who seems to think otherwise?
You know, it's hard to tell. You know, you got to get past Donald Trump negotiating with himself, you know, launching his team today by basically cutting his strategy in half and saying, well, you know, I'd go for an 80% tariff or even less. So I think that's obviously an indication that we're willing to deal. But the reality is that the reason that China has had to produce a stimulus strategy is because this trade embargo has basically shut off trade with their largest trading partner, and that has a significant impact on companies that are basically producing goods that are destined for the U.S. market. And the other thing that I think is underreported is the strategy that Trump has of basically now being open for business for any trade deal on various bases. He's not just the balance of trade, but on other non-trade items. Has really gotten the attention of other China traders who are, from what we can tell, flocking to Scott B and the trade team to cut a deal. And China looks at that and goes, wow, we really hope that they had actually joined our ranks to oppose the U.S. trade sanctions that we've put in place. So I think there's a real political problem for China to see how much of an attractant doing business with the U.S. is compared to maybe siding with them against the U.S. on our trade regime.
I just have to say, I feel like it's going to be really hard for me to not just refer to the Treasury Secretary now as Scott B, and you two are officially Rick D and Jeannie Z in my mind right now as we consider the words of the president from today. It wasn't just tariffs that he decided to weigh into when it comes to China on Truth Social. He also was weighing in on something that Bloomberg has reported he actually initiated with the Speaker of the House, which is raising a tax rate on those making $2.5 million or more to 39.6% to help pay for some of the other tax cuts he wants to see in budget reconciliation. I actually had the chance to ask the Commerce Secretary, Howard Lutnick, about that proposal last night on Balance of Power. This is what he said.
The president's trying to make sure he gets no tax on tips, no tax on overtime, and no tax on Social Security. And if he says, look, the richest Americans, remember, he cut it from 39.6 to 37. So if he just goes back to what he did last time, I'm in favor of that. I think it's smart, as long as it's a redistribution to his priorities of no tax on tips, no tax on overtime, and no tax on Social Security. I think it's smart.
So Howard L. thinks it's smart. But does President T really think it's smart also? Because, Jeannie, I'm looking at this True Social post today that says, quote, the problem with even a tiny tax increase for the rich, which I and all others would graciously accept in order to help lower and middle income workers, is that the radical left Democrat lunatics would go around screaming, read my lips, the fabled quote by George Bush, the elder, that is said to have cost him the election. He ends by saying, Republicans probably should not do it, but I'm okay if they do. Does that tell them that they should, Jeannie, or that they shouldn't? Because I'm a little confused on this one.
I was too, Kaylee L, and it's fascinating because he sort of giveth and then he taketh away. And I think in this case, as much as he wants to blame the liberal lunatics, the reality is there is a good portion of his base for whom this idea is not particularly popular. And I think the fascinating thing is it's reflecting this real deep divide in the Republican side between the Bannon populists and the Elon Musk plutocrats. And at this point, he was sort of giving to the Bannon side, and then he's taking away, because I think he recognizes how difficult it is, even for this changed Republican Trumpian party, to float increased taxes. He's doing it with tariffs, but of course he keeps reiterating, these aren't a raise on taxes, which of course we all know they are. But in this case, this would be a fundamentally huge pill and difficult pill for Republicans in the Senate and the House to swallow. So I don't think it gets there. And I think he woke up this morning, recognized that, and said, okay, if you want, but I'm not going to push too hard for it.
Well, so Rick, you've obviously seen a bit of a change within your Republican Party, as Jeannie is alluding to, over the last many years. But are they really ready for this change in particular? It's Republicans who are going to hike taxes on anyone?
Probably not. I think that the original concept presented by the president kind of fell flat. And he is many things, but he is not blind to the political ramifications of what he does. And so here we are, seeing him kind of negotiating with himself. I'll trot this out, see if it goes. But the reality is, and I think the White House is starting to understand this, they have a massive hurdle to get the big, beautiful bill in its current state passed through the House of Representatives specifically. And by adding any kind of controversial items, and obviously a tax increase under any circumstances with most of the members of the conservative group in the House of Representatives would be seen as adding an enormous amount of burden, and not just cost, but political burden. And so this thing could collapse on its own weight, and so why add any more weight to it? And I think the president, basically figured that out this afternoon and started, giving people a reason to go their own way. And he really is starting to treat Congress with kid gloves compared to the first 100 days of his session, where he basically ignored Congress and said, just give me my confirmations and I'll go about running the government through executive orders. So I think they're trying to change their tone. They're trying to give space to the House. They're trying to even, sort of do what they can to facilitate a bill getting through, and the House is struggling. So I think this was a smart move on his part. Typically, we wouldn't like this kind of announcement and then backing off, but I think the key is giving members a chance to do whatever they want to do and let them figure out a course forward is the right approach for this White House.
Well, and Rick, just quickly here, we've been focusing a lot of our attention, and rightly so, as they're moving first on the House and the difficulty the House is having in putting it together. But what about the difficulty of getting the Senate to choke down whatever it is the House can pass? Is there enough alignment between the two chambers on this package?
There are a lot of House members right now who are wishing, at least they told me, that they were wishing that they had taken up the John Thune approach, which was to split the bill in half and do taxes first. So I think that there's nervousness about that. I don't think that we're in a situation where the Senate's just going to take these massive budget cuts, upwards of $1.5 to $2 trillion that the House is talking about, just because that's what was incumbent in the package. I mean, there's less than 200 billion in cuts in the Senate package. So that's a gulf that is just not going to get filled. And I think we're just beginning to see a reality taking place, which is this: even if the House is able to get a bill passed, and there's no guarantee about that, the reality is just not going to meet the Senate's expectations.
Well, and Jeannie, when we consider the likelihood of passage in our final minute here, do Democrats need something to pass that either doesn't have tax cuts for the wealthy or does include cuts to Medicaid so that they have something that they can adequately message against in 2026?
I think their message is going to be that the GOP is consistently helping the rich by taking away Medicare and Medicaid from the working poor, the working class. And that's why Donald Trump's messaging about, increasing taxes on the wealthy was so fascinating. It was something that Democrats would surely have supported and liked. But Kayleigh, can I just say, I thought it was fascinating in your interview with Howard Lutnick. He kept reiterating that Donald Trump is committed to those tax breaks on tips, overtime, and Social Security, which leaves us in the same problem we began with, which is how do you pay for any of this?
Yep, math can be difficult. Jeannie Shanzano and Rick Davis, Bloomberg Politics contributors, our political panel on this Friday. Thank you for being here on Balance of Power. And we have much more still ahead as we bring in Hagar Shamali next, looking ahead to President Trump's trip to the Middle East next week. That's on the other side of this break here on Bloomberg TV and radio.
It's 1:21 on Wall Street. I'm Amy Morris. Prosecutors and regulators are investigating a $32 million deal between CrowdStrike and Carahsoft Technology to supply cybersecurity software to the Internal Revenue Service. Investigators with the Justice Department and the Securities and Exchange Commission want to know what senior company executives knew about that deal. CrowdStrike shares now 4.5% lower. Wall Street ends this week on a cautious note as the U.S. and China prepare to start trade negotiations. The S&P wiping out its gains and bonds edging higher. We check markets for you all day long here at Bloomberg. The S&P 500 now down 0.1%. NASDAQ down 0.1%. The Dow is down 0.3%. The 10-year Treasury yield at 4.37%. The 2-year yield at 3.87%. Pinterest shares more than 5% higher at this hour after its second quarter revenue guidance topped estimates. The company's efforts to use artificial intelligence to boost growth seem to be paying off. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. We return now to Balance of Power with Kaylee Lines.
All right, Amy Morris, thank you so much. Checking out the trading on this Friday as we wrap up another incredibly busy week in Washington, though they all seem to be these days. Another one of those weeks where there's so much news that sometimes you don't have enough time to talk about it all. Like yesterday, for example, we got the first post-Liberation Day trade deal or framework between the U.S. and the United Kingdom, and we got history made in Rome with the election of a new American Pope. And with those things going on, you'd be forgiven if you missed the Bloomberg scoop that the Treasury Department was actually developing a fast-track process for screening foreign investments in the U.S. through CFIUS, an effort that this administration, the Trump administration, expects could smooth the way for billions of dollars from foreign sovereign wealth funds to come into the United States. Sovereign wealth funds from countries like the UAE or Saudi Arabia or Qatar. No coincidence that those happen to be three countries where President Trump will be visiting next week as he makes a trip to the Middle East. And obviously, in addition to foreign investment, there's a lot of other things he is likely to discuss there. And that's what we want to get into now here on Bloomberg TV and radio. I'm pleased to say joining me is Hagar Shamali. She is now the CEO of Greenwich Media Strategies and founder, but also former director of Syria and Lebanon at the National Security Council. And here with me in our Washington, D.C. studio. Hagar, good to see you as always.
Thanks for having me.
Obviously, this is going to be a very big week for the president. There is a lot he'd like to discuss with the UAE and the Saudis and Qatar specifically. How should we consider the kind of financial aspect of this relationship as he's courting investment from these countries into the U.S. and how that influences actually the shape of those alliances and the positioning of geopolitics in the Middle East?
Yeah, that's such a good question. No one is framing it that way, by the way, and because one of the most important pieces of this is actually an economic route that started under the Biden administration and is now being continued under the Trump administration. One of the real policies actually that's being continued called IMEC. So something where you're going India, Middle East, Europe, fashioning this corridor, if you will, to not only encourage economic trade with all of these continents and locations and regions, but also a lot of that is about becoming a counterweight to China. And so that's going to be a lot of the focus of this trip. There are going to be many things actually that they're going to discuss that are not economic as well. But a lot of that too is making sure you're pulling Saudi Arabia from China, you're pulling the region away from China, ensuring that Saudi Arabia is trying to diversify its economy. They're interested in all sorts of investments back and forth. And so they're going to be looking for that, certainly an increase in any kind of trade related to defense equipment as well. That's something that Saudi Arabia struggles with Democrats and has better luck with Republicans. So they're going to be talking about things like that as well.
Well, and for the UAE especially, we know there's kind of chip considerations as well. Bloomberg has had some reporting on whether or not the administration is likely to lift chip restrictions on the UAE in particular. As to your point, the whole point of that is to try to make sure those chips ultimately don't find their way to China. So maybe a lot of this does come back to China, but a lot of this is about this region as well in the current environment in the Middle East. When we consider the engagement we've seen from this administration so far with Israel as it relates to the ongoing conflict in Gaza, with Saudi Arabia as they look to expand the Abraham Accords, what really is, for Middle East purposes, objective number one for the president, do you think?
Absolutely. So there's a lot of wins for the president to achieve in Saudi Arabia, and one of the ones at the top of the list is the discussions that would lead to peace deals, a number of peace deals. They want to increase the Abraham Accords, increase the countries under the Abraham Accords as much as possible. The president, and I'm not trying to say this lightly, he is focused on a Nobel Peace Prize through the Abraham Accords, and he's been very clear about that, right? He was clear about that the first time around, and now the second time around, and a lot of that, a big chunk of that is really through Saudi Arabia. Not all of the countries, but Saudi Arabia would be a big one because you'd get a lot of others in its trail. And those talks are talks that have already existed, right? So they've been going on for a while, really since the end of Trump's term, Trump 1.0. And so that's really, they're going to be continuing those talks. Now, there are certain things, elements of those talks initially that appears that they're also being pulled out. Things like discussing civil nuclear partnerships, things of that kind that were originally going to be part of a normalization deal or peace deal. And it looks as though that might be pulled out. But nonetheless, I think it'll all be in the context of getting to a final destination, and that destination being having Saudi Arabia and other Middle Eastern countries under the Abraham Accords.
What timeline do you think is realistic for that? This visit, I would imagine, is not going to be alone in accomplishing that.
No, well, and the Saudis, unlike other countries, they've made it clear, and I don't think that they're going to backtrack on their insistence that there be the promise of a Palestinian state. It doesn't mean that one needs to be necessarily created or recognized, but that there be some kind of process to get there, and that's going to hamper things a little bit. I mean, if I were a betting woman, it's hard to say, maybe 2027. I just, sometimes I think it'll be in a year or so. And then other times, there are days where I'm like, this is really happening. And then there are days where I think maybe another 2 years.
Yeah, well, every day is different around here, that's for sure. But to your point on there being some kind of day after long-term solution for the Palestinians in Gaza, where even are we on those conversations, on the idea of renewing any kind of ceasefire agreement or bringing some kind of end to this conflict? Because the administration was very focused on that, very proud of the deal reached on the eve of Trump's negotiation. And then what happened?
Yeah, and you know, it's funny, the last time I was on, which was maybe 10 days ago, we discussed this, and there were a number of deals that were going back and forth, and there was a deal proposed by the Israelis that was rejected, then the Egyptians and Qataris had come in, and we are now really, unfortunately, in a spot where we've gone completely backwards. The war is being actively expanded by Israel in Gaza. It's a decision by the cabinet, but also, more importantly, it was a decision that very clearly laid out that the hostages were not being prioritized. We don't know, but we believe we're hearing between 21 and 24 who are alive. I don't want to make any kind of assertion on this, but anyway, every day that passes is a risk for them, and we know that, and the cabinet really came out crystal clear and said, we are prioritizing the expansion of this because they have Hamas by the neck and they want to crush them completely. And I, as somebody who worked in counterterrorism, I want nothing more than to see Hamas obliterated. My own opinion is I'm not sure I understand why they can't cut a deal, get the hostages released, and then do targeted operations as they have in Lebanon, for example. But because I'm completely behind the idea of crushing Hamas completely. Yeah. But anyway, that's Bibi's clearly very intent on that singular goal.
So what role does the U.S. play in influencing Israel in any of this, knowing that Israel also maybe have taken aback by some of the Trump administration's recent actions, including declaring a truce with the Houthis seemingly out of nowhere?
Yeah, I was just going to say that. So actually, the Israelis, and this I think is a bit indicative of how things might go between the United States and Israel, is Bibi has been blindsided by the Trump administration a number of times now. So first you had, for example, the talks that were taking place directly with Hamas on the release of American hostages. You have the Iran talks, and now you have this deal that the U.S. administration cut with the Houthis, where the Houthis have promised not to target American vessels in the Red Sea, but that's it. Just the American vessels. And that deal not only blindsided Bibi, according to press reports, but it indicates it's very demonstrative of an America First policy, right? We care about our vessels, we care about our national security objectives only, and what is directly American, and we're going to pursue that unapologetically. And that makes it difficult. While Bibi seems to listen to Trump and has a lot of respect for him, or Trump has a lot of clout with Bibi, those kind of efforts are going to make it more difficult for the U.S. to push Bibi where they want.
You raised Iran in that last answer, and I do want to talk about that as well. As we learned today, another round of talks between the U.S. and Iran will take place this weekend, on Sunday specifically, in Oman. And I wonder how you see progress here, because we are still talking. This is the next round of talks in what has been a line of them in succession. But how far still does that put us from actually reaching some kind of agreement with Iran?
Yeah. So this one in particular, the thing that I think so important to talk about these talks is that what I see a lot in the public discourse out there is that it's just a repeat of what the JCPOA under President Obama.
Is that thinking wrong?
He's completely wrong.
Okay.
He's completely wrong. And I worked on that deal as a spokesperson. I was Treasury spokesperson at the time. I worked on that deal when it was happening under President Obama. This is completely different. This is based on an assessment that Iran is very close to a nuclear weapon, that would fundamentally change things in the Middle East and would trigger an arms race and completely change our national security problems there. Then that means that it inevitably could lead to a military solution, and that these talks are a last-ditch effort. So the talks are a last-ditch effort, and unlike the ones under Obama, they don't go into the nitty-gritty of how many centrifuges can they have, which centrifuges where in Iran, how much can those centrifuges operate, how much uranium. No, it's very singularly focused on you, Iran, can never have a nuclear weapon. There is no timeline. It's never. If you don't agree, the U.S. or Israel, whichever, will bomb those nuclear facilities. And that is a threat Iran takes very seriously, because in October, Israel bombed the defense systems around those nuclear facilities and Tehran, and the Iranian regime is very weak at the moment, so they can't risk that.
So would they agree?
They are in a position where these talks could go well to agree, because they're desperate for a win, given that they're on the defense and that they need to survive, and that they need sanctions lifted. But I don't know that everybody across the Middle East is happy about that, by the way. I don't think the Saudis are very excited about that. I know that those who are working against Hezbollah in Lebanon are not excited about that. They want nothing more, me included, to see the Iranian regime crushed.
Well, so President Trump could get an earful about this. He's not just coming to these countries with his own objectives. They probably have things they want to say to him in return.
Absolutely. And I believe the Trump administration, from everything I've seen and those I've spoken to, there is a very large focus on this question of triggering a nuclear arms race in the Middle East. That is what incentivized these talks. And you even saw it with the Vice President, J.D. Vance. He said earlier this week that he's hoping that these talks could open the door for talks with China and Russia to talk about decreasing their nuclear weapons altogether, that everybody could. That's a very, by the way, Reagan-esque way of looking at things. It's a positive goal, regardless of what people like me think of the Iranian regime. And so that's how they're going to couch it. They're going to go to Saudi Arabia and say, listen, this is important. This is a priority. You need to support us, even if it's quietly behind the scenes, and let us do this. But I have no doubt that it will come with some kind of exchange of some kind, as it did under President Obama, whether it's defense equipment deals or whatever.
Well, we'll have to look and see how all of this pans out next week. Good to see you as always, Hagar. Thank you for being here. Hagar Shamali, former director for Syria and Lebanon at the National Security Council, now founder and CEO at Greenwich Media Strategies, here with us on Balance of Power. I would note the White House Press Secretary Caroline Leavitt is currently in the briefing room talking about trade. She says that 80% figure of the tariff on China Trump floated earlier was just the president floating it. We'll have more on trade coming up next on Bloomberg TV and radio.
It's 1:40 on Wall Street. I'm Amy Morris. Switzerland held what it said were constructive trade talks with U.S. officials, hoping to soon follow the U.K. and sign a deal with the Trump administration. The discussions focused on tariffs, non-tariff trade barriers, subsidies, and taxes, with Switzerland aiming to finalize an agreement with the U.S. The comments come after President Trump threatened tariffs of 31% on Swiss exports to the U.S., citing a significant trade deficit in goods with that country. Wall Street may be ending the week on a cautious note as the U.S. and China prepare to start trade negotiations. We do check markets for you all day long here at Bloomberg. The S&P 500 down 0.1%, NASDAQ down 0.1%, and the Dow is down 0.3%. The 10-year Treasury yield at 4.37%, the 2-year yield at 3.87%. Brent crude 1.7% higher now, trading at about $64 a barrel. WTI 1.75% higher, trading around $61 a barrel. Those oil prices are on the rise on renewed optimism about China trade talks. Despite that optimism, though, trade tensions are in place with the U.S. sanctioning a Chinese refinery and the U.K. targeting Russian oil exports. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That is a Bloomberg Business Flash. Let's go back now to Balance of Power with Kaylee Lines.
All right, Amy Morris, thank you so much. I'm Kaylee Lines here in Washington, live on Bloomberg TV and radio, as we are pretty much every day, are keeping track of the latest when it comes to tariffs. After President Trump, of course, today floated the idea of an 80% tariff on China, much lower than the current 145% cumulative rate, seeming right, leaving it up to the Treasury Secretary Scott Bessent as he makes tracks to Switzerland for talks alongside the U.S. Trade Representative Jameson Greer with China that begin tomorrow. And we're trying to get as much insight as we can into the thinking of this administration around trade ahead of that meeting and the aftermath of the framework agreed to between the U.S. and the U.K. yesterday. And we got some of that from Peter Navarro earlier on Bloomberg Surveillance. He's White House Director of the Office of Trade and Manufacturing Policy, and he had this to share with our colleagues.
All we're doing is trying to level the playing field. I saw the EU kind of rattling sabers, I think it was yesterday, about some kind of retaliation. And I would just say to anybody who's in the European Union, I mean, how can you look us in the face and threaten us when your tariffs are higher? You have lost cases repeatedly at the WTO on us selling you things like beef and poultry, and you won't even honor that. So
Peter, yesterday the president called Ursula von der Leyen fantastic, and he said he hopes to meet her. But are you saying that the European Union is not as high on the priority list than, say, other trading partners like South Korea and Japan?
Not at all. I mean, the EU, to be clear here, we have the second highest trade deficit with the EU behind China. So they're very high on the list. All I'm saying here is that I found it unfortunate that the EU kind of fired, I think some term was fired, shots across our bow. It's like retaliation will not work against the United States. We shouldn't have that. Let's talk. Let's figure this out. And it would be nice. Here, let's give peace a chance here. All we're asking for here in the United States of America is fairness. I mean, would you agree? Is there any disagreement on this set and on your set that the tariffs of the EU are higher and that the non-tariff barriers are higher and that the WTO in Geneva is basically sanctioning that through two things?
Okay, but
one
Peter,
is the but would you agree with that? I mean,
I think there's a bigger
like
question.
Fact check there.
There's a bigger question here. There's a bigger question here, and this is something that the German finance minister has come out and talked about, which is they'd be willing to drop all tariffs to zero if the U.S. were willing to drop all tariffs to zero. There is a willingness to negotiate around the board to a lower tariff regime. Would that be acceptable to you, or is 10% the new floor?
So let's stay with that. See, that's such a misdirection. Okay. It's the non-tariff barriers, stupid, to kind of paraphrase Bill Clinton. It's like it's the non-tariff barriers. So when countries like Vietnam or entities like the EU say to us, oh, let's all go to zero tariffs and everything will be okay. That's not the problem. It's part of the problem, but the bigger problem is the non-tariff barriers. In Europe, it's the VAT tax.
So Peter Navarro choosing to focus on non-tariff barriers rather than the question around this 10% baseline tariff rate that still remains, which is what my colleague Lisa Abramowitz was asking about. And we actually heard from the White House Press Secretary Caroline Leavitt about that. She's still briefing the press from the briefing room as we speak, saying she had just heard from President Trump that he is determined on that 10% baseline tariff, that he is committed to it. So I guess there's your answer, at least for now. She also, of course, was asked about the president's musing on Truth Social today, suggesting that 80% was a tariff level on China that seems right. This is how the press secretary addressed that.
The president still remains with his position that he is not going to unilaterally bring down tariffs on China. We need to see concessions from them as well. And again, that's part of the reason that Secretary Bessent is going to talk to his Chinese counterparts this weekend to start those discussions in person. As for the 80% number, that was a number the president threw out there, and we'll see what happens this weekend. And always in the effort of transparency, I'm sure you'll hear directly from the Treasury Secretary or the president.
And as we wait to hear from the Treasury Secretary or the President, we add a voice of experience here on Bloomberg TV and radio. Nazak Nakaktar is with me. She's National Security Practice Group Lead at Wiley Rein, former Assistant Secretary for Industry and Analysis at the International Trade Administration as well. Nazak, welcome back to Bloomberg TV and radio. As we consider this number that was thrown out there, to paraphrase the words of the press secretary today by President Trump, that the tariff rate on China be brought from 145% down to 80%, even at that level, what does that really fix? What trade can realistically happen with tariffs still that high?
Great to be with you again. That's a really important number, because when we look at our trading relationship with China, we have two key issues. We have massive market access barriers to exports of goods and services into China. And then we have China's distorted command style economic system where the government pulls every possible lever of the economy, including, raw material, electricity, land, labor, certainly prices, to underprice the United States. And what I found out through my 25 years of experience dealing with trade with China, representing domestic industries, Chinese goods are typically valued at about 60, 70%, in many instances less than U.S. products. So yeah, I think the president, if he needs to point to numbers to justify his 80%, I don't think he's going to have to look farther than looking at China's market access barriers and China's level of underpricing that is aided and abetted by the Chinese government pulling these levers of the Chinese economy to underprice us. So he's essentially sort of level the playing field. Yeah.
If you see justification for that number, do you have confidence that they actually could walk away from talks in Switzerland tomorrow at a number like that? Given your vast experience in dealing with China on trade issues, are they going to be a willing partner in these conversations here, Nazak? Do you think tangible outcomes are possible in the short term?
Look, I think if the Chinese press the president or Secretary Bessent and Ambassador Greer on the 80%, it's going to be easy for them for the U.S. administration to justify it. But I don't want to. It's impossible to overstate how difficult these negotiations are going to be. The U.S. is looking for the Chinese government to not only open up the markets for U.S. businesses, but really to reform their economy so the U.S. market, doesn't have to deal with these distortions that arise from the Chinese government intervening so much in the economy, including currency manipulation to underprice. But it's going to be very difficult to press for that because the Chinese government needs that to retain its position as the global manufacturer. So what we ask for, the Chinese government may not be able to give. And so the big question for Secretary Bessent and Ambassador Greer is, where do you find compromise? And can you find compromise at all? The Chinese are pretty much going to, I think, stand firm on what their demands are, which are continued access to the U.S. market and technology transfer from the U.S. to China. And those are things that the administration might not be too keen to give.
Well, on your point about the kind of manufacturing overcapacity, the flooding of global markets with Chinese supply, this is not a unique idea to this administration. We heard plenty about this during the Biden administration as well. This is something that the Treasury Secretary then, Janet Yellen, was incredibly focused on. But is the difficulty with that in particular, not just in asking China to make kind of structural changes to the economy as you described, also that the U.S. can't necessarily force that alone when China has plenty of other buyers who may be willing to take that supply? Is it that the U.S. actually needs other countries to cooperate with this effort? Because when I spoke to the Commerce Secretary, Howard Lutnick, about this yesterday, he kind of pushed back on the idea that they're asking that of other countries to counter China.
That's a great question, and you hit the nail on the head. Look, the dynamic is when China floods the global markets with cheap goods, right? And steel and aluminum, that's kind of when the world started waking up to China's overcapacity. But now we have autos, we have semiconductors, optical fiber cables, the list goes on, right? What happens there is that it collapses global prices. And then producers in other markets can't sell in their markets, can't sell in markets abroad. So then they end up redirecting their product to the United States, which is why the tariffs that the president had imposed on steel and aluminum, in part, just to put the wall around the United States, prevented us from feeling that effect of China's overcapacity. So on one hand, Secretary Bessent is right, and on the other hand, there's a counter argument. One, if we just put barriers around ourselves to sort of shield us in the United States from overcapacity, does that kind of take care of the problem? Yes, and we saw that example with steel and aluminum. But at the end of the day, we can't have our allies' markets collapse either by virtue of China's overcapacity, because it's having the same effect on our allies that it is on the United States. So it's really incumbent on the United States to kind of give them top cover to be able to push back. The thing I want to really emphasize is that when we imposed the steel and aluminum tariffs, many of our allies started getting flooded with cheap Chinese steel and aluminum. So they started erecting safeguards around their borders to shield themselves from China's overcapacity. So I think we're going to get there. It's really incumbent on us to give our allies cover so they could do the same and push back on China.
Well, one ally, the UK, now has a framework, at least trade agreement with the U.S. that does include taking down tariffs on steel and aluminum in particular, as well as kind of other sectoral elements, including this 100,000 auto quota where the tariff rate is only 10%. And I wonder what you make of that framework we learned about yesterday, knowing there's still details that need to be filled in, Nazak, and if you see that as being a kind of reliable blueprint that other countries might look to follow, or just being unique to the UK specifically.
It's an important sort of signaling tool, right? I mean, there's elements of the deal that are really good, increased market access for agriculture in addition to the items you said. Market access, I think the U.S. government is estimating an increase of $5 billion. Still, the 10% tariffs remain on most goods from the UK. That'll raise $6 billion in tariff revenue from the United States. UK tariffs on the United States drops from 5.1% to 1.8%. That's a big deal. So there's a lot of good there. And I think what the president really wanted to do was quickly get a deal, a big deal that signaled to other countries, look, a deal with the United States is possible. We don't have to continue to be enemies. Peter, who was on just a little bit earlier, Peter Navarro, is right. Our allies in Europe, most of these European countries, if you combine their tariff and non-tariff barrier equivalents and convert it into a tariff rate, it's about 13% on the United States. Before the Trump administration, the tariff rates of the United States were about 1.6% applied tariff. So you see this huge disparity. So I think what Trump, again, the Trump administration is really at least hoping a signal to the markets is, you know, we want to work with our allies again. We want to get to trade deals that open up both of our markets. And if we can do that, if we can integrate our economies with those of our allies, now we have a hope of pushing back against China. And let's be clear, Europe doesn't have to rely on the Chinese market anymore. Integrate your supply chains with the United States. I think this is what Trump's trying to signal. Integrate your supply chains with the United States. Neither of us are going to be dependent on China, and our economies are going to be stronger. I hope the president can execute that strategy, but we'll see what happens in Switzerland.
Indeed, we will. Nazak, thank you so much, as always, for joining us. Nazak Nakakhtar, National Security Practice Group Lead at Wiley Ryan, and former Assistant Secretary for Industry and Analysis at the International Trade Administration, joining me here on the early edition of Balance of Power. And we'll continue this conversation on China and trade later in the late edition of Balance of Power. Congressman Darren LaHood of Illinois will join me. He's a member of the China Select Committee, also can give us some insight as to what exactly is happening inside the House Republican Conference right now when it comes to advancing the massive spending cuts and tax cuts package they want to next week. So I'll see you back for more of that at 5 p.m. Eastern. In the meantime, Bloomberg Business Week Daily is just ahead here on Bloomberg TV and radio.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, Matt Miller here in the bubble at 731 Lexington Avenue, in for Carol Massar, Norm Melinda in for Tim Stenovec. We're in for those people specifically.
Okay.
Exactly,
Okay.
yeah. Hey, listen, I saw a great tweet. President Trump says 80% tariffs on China seem right. Then he says up to Scott B. So I guess
has to be Scott Bessent. We surely hope.
I'm guessing that's right. They are starting their trade negotiations. Scott Bessent, U.S. Treasury Secretary with U.S. Trade Representative Jameson Greer in Switzerland with the Chinese this weekend. It'll be the first public talks between the world's two largest economies since President Trump imposed his Liberation Day levies, 145% on China, and Beijing retaliating with 125% duties. And then markets kind of come to a grinding halt, Nora.
It has been an interesting week. I'm thinking about all that we've seen throughout this week. It's crazy to think that we had the Fed on Wednesday. We get CPI next week. So many moving parts, but of course, tariffs remain the thing in focus as companies are trying to look at, do they need to pull back their guidance? We're seeing a lot of companies that are doing that, and we're seeing some that are in the mixer, so we thought were in the hot seat, and they're actually maintaining. So lots to parse right now.
Yeah, lot to talk about. We're going to go to Dan Flatley, our U.S. Treasury reporter in Washington, D.C., and talk a little bit more about this. Right now, I want to get a check on the absolutely unchanged S&P 500, not only for the day, but since April 2nd. Amy Morris in Washington, D.C. with a Bloomberg Business Flash.
All right. Thank you, Matt. Yeah, you're absolutely right. Stocks have been bouncing between like zero and a little bit in the red and a little bit in the green, and then back in the red, and now they're back in the green, but only just by a smidge. S&P 500 now up 4 points. NASDAQ up 16. The Dow, though, still down. It's down about 60 points. The 10-year Treasury yield at 4.37%. The 2-year yield at 3.87%. President Trump floating that 80% tariff on China ahead of this weekend's negotiations, something the White House says he, quote, just threw out there. Treasury Secretary Scott Bessent and U.S. Trade Representative Jameson Greer set to begin those talks with China in Switzerland this weekend. Now, Switzerland held what it said were constructive trade talks with U.S. officials, hoping to soon follow the U.K. and sign a deal with the Trump administration. Those talks focused on tariffs, non-tariff trade barriers, subsidies, and taxes. Switzerland aiming to finalize an agreement with the U.S. Richmond Fed President Tom Barkin says it is not a given that companies will be able to raise their prices to offset the cost of tariffs, warning that consumers' tolerance after years of inflation can only go so high. He says the economy is in a good place, but he warns tariffs could put upward pressure on inflation. He spoke at the Loudoun Chambers Policymaker Series. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That is a Bloomberg Business Flash. Let's go back to Bloomberg Business Week Daily with Matt Miller and Nora Melinda.
All right, Amy, thanks very much. Amy Morris there in Washington, D.C. Matt Miller in the studio here with Nora Melinda. We're filling in for Tim and Carol on this Friday as they leisurely lounge.
What are they doing?
I think they're just taking a day off because they work so
Giving
hard.
us their seats.
They feel like Friday. They don't need to be here. We're happy to fill in, though.
It's a fun Friday.
Very excited to be here. Molly Smith joins us, economics editor from Bloomberg News. And Molly, you know, in thinking about the economy and going through all the stories on the Bloomberg today, I noticed that Sweet Green, the massively expensive salad maker, cut its forecast due to tariffs. So a company that sells salads in America says tariffs are hurting its business. What do you make of that?
I mean, is that the ultimate recession indicator? That's got to be it.
Has to be, right?
They don't import their romaine from Beijing. I mean,
I don't know where the lettuce is coming from. It could be somewhere else that's getting tariffs as well. But you know, I think this like speaks so much to like where everyone right now is just so desperate for these alternative sources of data, because the hard data, you know, the real stuff that comes from the Bureau of Labor Statistics, the Commerce Department, et cetera, still shows that we have a really good economy.
Looks great. 2.2% unemployment. We added 177,000 jobs.
Yeah, you know, we can't complain about these things.
Yeah.
So you're just looking for, okay, what is the next forward-looking thing that's going to tell us that all of these dire predictions are maybe have some teeth to them. So whether that's the Sweet Green forecast or something else, I think that's just where people are really looking to see where's the shoe going to drop.
Right. And then I know Richmond Fed President Tom Barkin said today that it's not a given that companies can raise prices to offset tariffs.
God, I hope Sweet Green doesn't raise prices
even
anymore.
more.
It's $20 to get a lunch salad.
Oh, I know. This is,
that's exactly the point. That however many years we've been experiencing this really high inflation, that the consumer's tolerance is just only so high. And I mean, I've even noticed walking around the office here, it seems like a lot more people are bringing in their lunch lately to avoid the corporate salad, and that's what I like to call Sweet Green and the like. And that, I mean, that Barkin, I think, has a point there, that there just becomes a certain point where it's like, okay, I'm not going to buy this, and you will find an alternative.
So what is the latest data really telling you about the consumer's tolerance? Because, I mean, of course, anecdotally, we're saying people are packing and everything, but when you look at the data, I mean, we have CPI next week, and of course, a few other indicators, but what are you all seeing? What are you hearing about what the consumer is doing during this time period?
And this is what's exactly so challenging, is that the data that we actually have in hand right now, well, first of all, it's really only for March. We get retail sales data next week for April, so that'll be a good look at that. And so far, that forecast is not looking so great after, there's so much free, pre-tariff front-running activity back in March. But right now, the spending data, I think what the concern is more is in the sentiment indicators, and that's where so many people have been quick to say that sentiment is not always the best predictor of spending, and wondering, when or if that correlation might change.
So when the soft data turns hard, I guess is what is how you could view it. And we, on my television program, I anchor Bloomberg Open Interest. It's every weekday from 9 a.m. to 11 a.m. on Bloomberg Television, Bloomberg.com, or on YouTube. We read this data every day at 10 o'clock, and like you say, that when we see consumer confidence data, it's very bad. Anything soft, like how do you feel? When we see what's actually coming out of their wallets, it's really good. For example, we imported an absolute ton of stuff from China in the first quarter. Does that stop now? I mean, have the tariffs that President Trump put in effectively embargoed trade with China?
I think, well, first of all, just on why imports were so high in the first quarter, this was all to get ahead of tariffs. So I don't know that I don't know if that's necessarily correlated with sentiment in that way. And there was a lot of pre-buying in that same vein as to why consumer spending was pretty solid at the start of the year. Now we're looking to see when are those volumes going to drop. We did hear from the Port of LA, I believe it was last week, that the volumes have already started to drop, and that they're closely monitoring the ships that are on the water right now and what exactly is coming in. And also if there's just a premonition that, hey, going into this weekend, the rate has to come down. I think that there's no question about that both sides at some point are going to have to come down. It's a matter of when that's going to happen and when companies are then going to place those orders in response.
I just thought it was great. I saw another really cool tweet on social media. China should open its market to the USA. Would be so good for them. Closed markets don't work anymore, said the guy who closed the market.
Right, I found that really entertaining too.
Lots to look into. I want to talk about the dual mandate.
Oh yes, the dual mandate.
Quickly.
For sure. Yeah.
Curious, are people... So of course we have this dual mandate. It's a situation where, we're trying to bring back inflation, but we're also trying to maintain employment. Where does the Fed focus in this time period? What are you hearing from your sources?
It seems like the Fed right now, obviously, this is the challenge of the situation they're in, that, tariffs would make the parts of the mandate go in opposite directions from each other, meaning that when you're dealing with higher inflation, you might want to keep rates elevated, but if you're dealing with higher employment, you might want to bring rates down. So that's the challenge they're in right now. And I think they are all just so wary of anything more about inflation after the years that we've had, and clearly how much people hate inflation, that's where they're going to step in first. But they've really been saying it really depends on where both sides of the mandate are and how far away they are from, normal or target levels. And that's just not really something that we have a great sense of yet, of what that formula is and when they would step in to act.
Did you see Meredith Whitney on my television program earlier this week?
No,
it's called
what'd she
Bloomberg
have to
Open
say?
Interest, every weekday from 9 a.m. to 11 a.m. on Bloomberg Television. She said she thinks unemployment's going to go to 6% by the end of the year.
Wow, that's an outlier.
Which is, for anybody who's
I haven't seen any
only
north
been
of
around for the past 10 or 15 years, 6 is a lot,
6
right?
is
That's
high.
almost 50% higher than where we are now.
Yeah, we're at 4.2 now, held steady in the last jobs report. And the thing is, with the tariff pass-through to the job market, this is going to take so much more time than the inflationary impact, right? The immediate impact of tariffs is that it raises prices on imported goods. The impact to jobs, though, is that then going to make, some products be in less demand? Are there then going to be, less employees then that would be needed at these businesses? That's going to take a lot of time to happen. And of course, the situation is just so fluid right now. I would be pretty surprised to see unemployment go up that high. And did she put a timeline on that?
End of the year.
And that would be very out of consensus.
We're not going to just relocate Foxconn from China to the U.S. overnight. So we won't be adding necessarily all those manufacturing jobs. Molly Smith, great talking to you. Thanks so much for joining us. Now, as promised, we'll get over to Dan Flatley. He is a U.S. Treasury reporter from the Washington, D.C. Bureau. And, of course, Dan, the treasurer, is going to go to Switzerland, go to Geneva, talk with the Chinese and USTR Jamieson Greer. Do you expect him to cut rates to tariff rates on China to 80% before those talks begin? It seemed like that's what the president was leaving up to him. Scott Bessent.
Yeah, it's a great question. I mean, I think what we know at this point is that as they go into the talks, they're not ready to really make any type of formal concessions or demands or anything like that. They're sort of trying to sort of see where the talks will begin, feel things out. I mean, it's a little bit of an odd situation, contrary to how you normally go into these talks where there's lots of groundwork that's already been laid. So, I mean, we're not exactly sure what to expect out of this, to be perfectly frank, although, we do kind of have a range here, right? We have Trump talking about 80%. We have the Chinese looking for 60% tariffs. And we have some reporting that shows that Secretary Bessent may be talking, maybe thinking more along the lines of the 60%, although he doesn't want to get crosswise with the president, obviously. So what's clear is there is going to be, or there is expected to be, some type of de-escalation. I think both parties are looking for that. So if we don't hear that coming out of these meetings, that would be potentially a shock to the market. I think as far as the floor goes or what the actual level will be, that kind of remains to be seen. And I think it depends on what China is going to offer on fentanyl. It depends on how the talks will actually go. I mean, there is still a chance, although somewhat, remote, that these talks could go nowhere. So I think that the pressure is on Scott B., as President Trump referred to him in a Truth Social post this morning, to deliver something here. And so I think that there's a lot of nervousness and sort of tension going into this weekend for sure.
I mean, we're talking about two major large economies here. Trade partners, of course, everyone has their own stake in the game. Are we really expecting anyone to budge here?
Yeah, I mean, it's a fair question. I think both sides have an incentive to move. The question is this the time when it's going to happen, or is this just going to be the first of many conversations? I mean, if you listen to what Bessent has said this week in his congressional testimony, he sort of set the expectations very low. He said, we're going to talk on Saturday. We may, talks may go into Sunday if we find that we have some issues that we want to sort out. But this is really the beginning. This is not any kind of formal trade negotiation or anything like that. But he has said, and this has been a consistent theme from him going back 2 or 3 weeks now, that there needs to be some type of de-escalation. Now, maybe that's wishful thinking on the part of the U.S. to sort of will the Chinese into that position. Maybe China, the folks representing China in these talks are not necessarily feeling that pressure, but we do get some sense from looking at the Chinese economy that they have some incentive here too to de-escalate things. So both parties are going in wanting some type of de-escalation. I think the question is, how far do they really want to go in this first meeting after all of these tensions have been ramping up over the last several weeks?
Who has the leverage here, Dan? Who's holding the cards, as President Trump would say? Because it seems as if we came out with a big stick and then, expected the Chinese to, bow down, but they have not. President Xi Jinping has not called President Trump, even though for a while he seemed to be pleading for Xi to call him every day. So who's got more leverage?
Yeah, it's a great question. I think that long-term, the U.S. probably has more leverage just given the size of our economy and the balance of trade that we have with China and the state of China's economy.
Long term, does that go till the next elections? Because this Republican Party could really lose a lot if it goes on that long.
Yeah, no, and that's it's a great point. What I was going to mention is that short term, I think China has the advantage because they can really throw a lot of problems into the supply chain to make it hurt on the U.S. economy. That, as you mentioned, heading into the midterm elections next year, that could complicate things for the Republicans. So I think again, both sides want to kind of come out of this with a win. The question is there a win to be had? And we just don't know yet. So it's a very fluid situation.
So, I mean, there was news that came out saying that the U.S. Treasury Department sanctioned an oil refinery in China. It's accusing of facilitating the Iranian crude trade. It says that it funds Tehran's military and violates existing U.S. sanctions. What's been the major reaction there?
Yeah, I mean, this is such an interesting development that's happened over the last several months in the background. You know, these small refineries, these so-called teapot refineries that are in China that are accused of processing Iranian oil. This is a big deal for the oil markets, for the sanctions world, for what's going on with talks with Iran and what's going on with talks with China. So I think the reaction has been, obviously, this is complicating this trading relationship. This is complicating getting a deal here. But at the same time, you do have a lot of folks in the administration still who are hardcore China hawks that want to see us going after China on a number of fronts, and also are hawks on Iran and want to see us cracking down on that. So there's a nexus there of things that does not necessarily help us get to a trade deal with China, but certainly is in the long-term security interests of the United States in the view of some in the administration.
Can you look at the U.S.-UK deal and take anything from that to try and forecast what we'll do with China, or is it just such a completely different situation that the two aren't comparable?
I think it's a different situation in a couple of ways, but I do think that there are some things that you could take away from the negotiations with Great Britain. One thing is that the 10% across-the-board tariff. So Peter Navarro was on Bloomberg TV this morning. He was asked about this. He talked a little bit about this, and he's really pointing to that 10% across-the-board tariff as something that's targeted not just at tariff barriers, but non-tariff barriers as well. So that is something that is likely to remain in place no matter what happens in any of these negotiations, and we saw that with the UK announcement yesterday. We saw also this idea that the U.S. is going to start to do deals with allies and partners in advance of any more substantive talks with China. So what they're trying to do, and this is something that Bessent has talked about as well, is kind of get everybody on side, get everybody on the U.S.'s side, and then negotiate some sort of bigger deal with China. And the UK, obviously, a long-time historic partnership with the U.S. Over the years since World War II, which was referenced in the discussion yesterday. And that is going to be something that I think the Trump folks are going to lean on to say, look, we're getting these deals done, even though some of the details, as we found out, still need to be sorted out. We're getting these deals done, and so this puts the onus on you, China, to kind of come to the table and work with us before we get too many people like on our side. So we'll see how that all plays out.
Dan, great getting your context here. Thanks so much for joining us with that intel. Dan Flatley there is a U.S. Treasury reporter for Bloomberg News out of the Washington, D.C. Bureau. We will all obviously be watching very closely, though maybe not as closely as Dan, what happens with the Treasurer and the USTR in Geneva this weekend as they go to negotiate these tariffs. The S&P 500 right now down 0.1%.
It's 2:21 on Wall Street. I'm Amy Morris. We check markets for you all day long here at Bloomberg. Hey, remember when we were in the green like about 20 minutes ago? We're back in the red, but ultimately very little change. The S&P 500 down 2 points. NASDAQ down 7. The Dow is down 100 points. The 10-year Treasury yield at 4.36% and the 2-year yield at 3.87%. Now, Wall Street may be ending the week on a cautious note as the U.S. and China prepare to start trade negotiations. Investors skeptical that the talks will result in a comprehensive agreement. They're instead preparing for a period of volatility and uncertainty. But right now, everybody's kind of holding still. Air traffic controllers guiding planes in and out of Newark Liberty International Airport briefly lost communications and radar displays early this morning. It is the second time this has happened, the second outage in as many weeks. The FAA releasing a statement saying that the breakdown originated at an FAA facility in Philadelphia about 3:55 this morning, lasting about 90 seconds. Now, for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Bloomberg Business Week Daily with Matt Miller and Nora Melinda.
Amy Morris, thank you very much. Amy Morris there out of Washington, D.C., and I'm never flying out of Newark Airport now.
Honestly,
forget about it, right?
There's better airports.
Yeah.
My opinion.
They need to pay people more and update their equipment and start running flights on time. No way. All right, Matt Miller here in the studio for Carol Masser, Nora Melinda standing in for Tim Stenovic. We're going to get to our CFO briefing right now. So we bring in Nina Trentman from the Bloomberg News side of the building. And Nina, you've brought the CFO of a construction company, which I find particularly interesting in this environment.
Yeah, it's actually a software company that sells a lot of construction companies' software. So, but yeah, it's an interesting space to be.
Howard Fu joins us right now from Carpinteria, California. Did I say that right, Howard? Carpinteria. Yes?
The Procore is actually based in Carpinteria, California. I'm joining you today from Washington, D.C., actually.
Well, I'm getting all sorts of things wrong, but I'm excited about Procore. I actually think the software side is such a cool piece of this business. I have a family full of architects, so they all use this stuff. But as you may have heard in the tease, when it comes to construction, I'm wondering about not only the labor issue with mass deportations, but also the high price of lumber, the high price of steel. Isn't all of this converging to make it a difficult business for growth?
Yeah, well, first of all, thank you all for having me today. The short answer is yes, but remember, construction, we've always talked about as being a very resilient industry. And when you think about labor, when you think about costs, when you think about tariffs, when you think about all those different things, all of these challenges are not unique in terms of what the industry has faced. And the industry has always come back. And we're in an industry that is continuing to build and continuing to rebuild. And this is just another line of things that the industry has been used to dealing with. And I'm confident that the industry will come out of this.
So tell us a bit more about what your company does, specifically from the software perspective. And of course, you all work with construction industries, but what role do you really play?
Yeah, construction is one of the least digitized industries in the world. And what Procore does is to help facilitate through our customers, the industry, to help digitize what's traditionally been a very manual work process to how we build things in the world. So think about digitizing project management. Think about digitizing the financial aspects of managing a construction project. Think about digitizing how we manage the labor and the equipment and estimating and all the different parts of the ecosystem and the flow for what needs to happen and the information that needs to happen and need to be verified. That's what Procore does. And our vision and mission is to connect everyone in construction on a global platform. And our vision is to improve the lives of everyone in construction.
Howard, jumping in here, Nina. Thanks for joining us. I'm just wondering, what are you hearing from clients at this point in time? We heard from Mark sort of a lot of uncertainty in the economy. We're expecting changes to the construction industry. And how far is that affecting your sales cycles? Are you already seeing some form of impact?
Yeah, in Q1, we actually had really strong results. And through April, which is the first month of our second quarter, we actually have not seen a material deviations from our pipeline in our demand or anything of that nature. Obviously, our customers are keeping a close tabs on what's going on in the broader economic environment. But you have to remember I said that the industry is really resilient, and they've been through things like this before. And when the industry and our customers make decisions, they're making decisions based on commitments that are going to have impacts over the next 2-3 years. And so the industry actually doesn't shift too quickly in terms of what the flavor of the day is in terms of the news that's going on. So what we're hearing from customers is they're keeping close tabs on things. They're making sure they have the pulse on what their subcontractors are doing, what owners are doing, making sure they have a good understanding and making sure they have an understanding of the exposure that they have across different things in their supply chains and so forth. That's actually what's going on right now. And Procore is actually seen as a partner in this because we do digitize the industry and we do help our customers digitize. We actually help them manage and get visibility into a lot of what they need to make sure that they keep a pulse on what's going on today.
So when should we then expect any changes? Of course, you said sort of your clients are not showing you any signs yet. Sort of when is a realistic point in time for us to expect changes?
I wish I had an answer to that. We're in the same boat as our customers. And again, we are actually doubling down on our partnerships to make sure that we have an open dialogue, to make sure that not only do our customers engage with us and we engage our customers, but our customers engage each other to make sure that when things do continue to evolve, that they are able to react in a timely manner. But it's very difficult to predict when things are going to happen. And so we're in the same boat with our customers.
How is this from a CFO perspective? We've seen a lot of companies this earnings cycle adjust their guidance, pulling guidance, adjusting guidance ranges. How are you thinking about guiding the street at this point, given that, of course, there is this uncertainty potentially facing your business?
Yeah, well, the first thing is we had a strong Q1, and our approach to guidance has been to take quite a conservative approach, both in terms of our full year guidance for the top line on revenue as well as our profitability, and also definitely for Q2 as well. I think in this environment, it's prudent to take that approach. We have run multiple scenarios internally about what would need to happen in terms of bookings for us to even come close to our guidance. And our guidance allows us to actually weather scenarios where there's a significant downturn to our demand, which actually we haven't seen yet through Q1 and through April. We think it's highly conservative. We have great confidence that we're going to beat our guidance for both Q2 and for the full year. But I think it's prudent to take a conservative approach given the uncertainties that are out there right now.
Hey, I'm looking at your website. You have these giant customers: Brookfield, Balfour, Gilbane, et cetera. And you just mentioned your Q1 was strong, but your stock is pretty much flat over the last 5 years. It's just done nothing. Why do you think that is, and what can you do to change it?
Yeah, you have to remember, over the last 2 years, we've kind of been in this challenging demand environment. And I think that has that has a big influence on the sentiment of our customers and how much they're willing to commit to in terms of the construction volume that they want to run on Procore's platform. The key thing to note is customers still stay with Procore.